and I don't really stop, right? I always look to see if there's things that I'm missing or if there are things that I can make myself better trader. So a lot of you guys that have short-term expectations will also lead to a short-term participation in the market because you're most likely going to be liquidated, or you're just going to give up because you didn't make $1 million in the next 2 months. That's not what trading is about. This is about you building a legacy. If you have family, securing their future, your future. So please don't think. And then, if that's your goal, right? That and in my Discord, I don't really do call outs every day. I do trade live. I would say Catching Rockets does as well. But the idea is not that I spoon feed you and you make money. Because Shorty dies tomorrow, guess what? You might find somewhere else. Of course, there's other people that are doing the teachings, but you want to stand alone one day, right? And there's a lot of people that were in the Discord, and they left, and they're profitable traders. I have nothing but respect for those people. They learned. They still thank me for what I've done. There's a lot of you that are still in the Discord and that are green, and I get messages from you guys. I had one that exchanged messages yesterday where it's like, oh man, I'm finally green, and he sends me the log. I give him the feedback, to improve it, right? A lot of people get, stationary in their mind where, they just want to keep the status quo. You always have to look how to get better, but it doesn't mean you increase size to make more money. Getting better is not making more money. It's being, investing or exposing yourself maybe with less risk, looking for better setups, really being kind of like a student of the market to get better at something that leads to a better lifestyle, right? So for you guys that are new, you have to be patient. And I'll start volume profile today from scratch, basically zero on knowledge and start building up on it. Before we go into the market profile, I would say that the most critical piece, I don't know why I can't click for some reason. Let's see what's going on here. Like it froze here. I don't know. Okay, let's see if this works. Okay, this works, but nothing else. The key component to the stock market, and for you guys to understand, is really the market auction theory, right? You guys should not proceed any other indicators till you understand how the markets work, right? In every market, in every auction, theory, irrelevant if it's stocks or whatever you're trading, fruits, oranges, cars, any commodities, there's always a buyer and a seller, and in between a buyer and a seller, that's where the stock market is. It's basically just doing the order matching, right? We find a buyer that's willing to buy at a price and a seller willing to sell at a price, then you have a transaction, and figuring out whether that transaction was more aggressive from buyer standpoint or seller standpoint is very, very important. And we have the tools to, do that, not necessarily with 100% accuracy because the market doesn't have that, right? But it does give you better odds, which is the probabilities that you want to play with to make sure that you're actually on the winning side. And, the key to all of this is understand the market auction theory and take out your bias that's not relevant to what the market's telling you. And as you guys know, we do teach market profile, volume profile, the two key components to understanding what the market's telling you. And then, of course, the footprints that give you the confirmation, right? The volume and seeing where the guys are coming in. So with no more introduction, market auction theory, right? If you guys look at it, you have the buyer sellers, when you have balanced markets and they're willing to trade, basically you're going to be in the balanced market, right? And that's what, this chart's showing here, if you guys take a look. So I don't know why this thing is just, okay, it's just stuck. Let me see if I can get out of it and reshare. Like it's not doing anything. 1 second, guys. Let me just shut it down and then reopen it. 1 second. I don't know why it's not letting me flip through the files. Apologize about this. Microsoft's giving me a ton of issues, and it did last week too on Friday, where Google Chrome would just shut down whenever the hell it wanted to. All right, I got it here. Apologies about that. So market auction theory is basically, in fact, just a brokerage that somebody's pairing up the buyers and sellers, right? It's simple concept of laws of supply and demand. If somebody has a lot of supply of something and you have demand for it, the market is always going to search basically the balance and efficiencies, right? So that is, when we talk about fair value, that is what that is, right? Typically the markets are gonna, they're gonna have balance, they're gonna have imbalances, which is basically the search of value. And then those values are either gonna be accepted above or below, and then they're gonna again balance the market, right? Typically you need something that sparks the change from balance to imbalance, right? So let me go here. So if you guys look at this diagram, right? So Shorty puts a bunch of bids to buy something. There's a lot of offers for something that I'm trying to buy, let's say a car. If they're asking, let's say recently when we talked about my purchasing of the car, the Yukon, they won $120,000. Shorty offered them 70K cash. They said, get away, right? Fuck off. And I said, sure. There'll be a time when you're going to call me. And they said, sure. They called me, right? And they're like, hey, we can do 80K cash. And I said, no, I can do 65 now. They're like, fuck off. And the game kept going because we didn't get the order to match. I didn't put the bid high enough to meet their ask. Therefore, there was no transaction. The dealer, right, if you want to call it a dealer, the locals, right, in the market, what they do is to make sure that they basically in a centralized place that they find the highest bid and the lowest offer, right? When you have that in place, then you have an order match. Once the match, then the trade is executed. So, you have different type of orders, right? If Shorty was to, they're asking 120K and I say, okay, I give you 120K in the market, that would be kind of recognized as a market buy, right? They're asking and I just offer and I give them that basically the bid at that level. And, at that point, the seller would be probably a winning hand where it's like, okay, well, you got it. Similar is happening in different markets right now. If you guys think about the housing market, I have some friends that are shopping for a house. They're offering on a house $599. That was the asking price, and they immediately offered $599. So when you think about it right now, is it a buyer's market or a seller's market in a housing market? Who's in control?
Sellers.
Anyone else?
More buyers.
This is definitely buyer's market, right? Sellers have to give up a lot right now. If you're selling a house for $600,000, there's a very high chance you're not going to get that. And there's a couple of, I would say variables to that. One, interest rates, right? Second, how's the capital markets right now? How are the loan markets and how are the banks doing with the liquidity? Have any of you checked your credit cards to see if you kept the same credit, what do you call that? Like when you have the ability to spend or what is it, credit max amount? Like, I don't know what they call it nowadays.
Rates are high and my credit limit is zero.
Yeah, your credit limits are getting reduced by the banks because they're hedging their positioning, right? How liquid they are. So same in this housing case for my friend. They offered immediately ask, and they're like, "Hey, what do you think about that?" I told them that's the dumbest thing you could have done in your lifetime. You're offering them something that they're asking for, and the house was sitting there for 45 days. Who is it? Whose move is it if you're selling a house in 45 days, nothing, you're not getting bids in a market auction? I'm selling a house and I have 0 bids at 600K. What should I do?
Lower the price.
Lower the price.
I have to lower the price to attract more buyers. And they're like, oh, but it's a really house that I like. Well, what are they inputting now in their search? In their transaction, what are they adding to it? Emotional attachment. They're getting emotional attachment to something. They don't even have it. It's not theirs, but they're emotionally attached to it. And that's what happens in trades too. People go long, and let's say the market's dipping, and what do emotional egocentric traders do is, as the offer,
They buy
more, and then they're like, oh, man, I blew up my account before I kept buying. I didn't have a proper stop loss. I didn't understand the risk that I'm accepting. And it's the same thing that happens in the market here, right? Any market. So you need to have buyers and you need to have sellers. a lot of people, this is a really big misconception, I would say, in the stock market is there's never more buyers than sellers. There's never more sellers than buyers, but there's a different type of sellers that show up or different type of buyers, just like in the housing market. My friend gave them their asking price, then he's eager to buy the house. Back in 2021, I don't know if Ashley's on the call. She's a broker in real estate. The houses didn't stay on the market for 45 days, guys. The houses were there probably for a couple of hours. You put up a house and you literally had to go above the ask to buy it. And I experienced this for some of the land I wanted to buy. The land per acre went from 30K to about 75K here where I live. And, I was not stupid enough to offer, let's say, for 3, 4 acres with a creek, water, no rights to minerals. I didn't want to offer 200K cash for it. I would lowball the offer, 150s, 160s. And they're like, oh, you're funny. We got 50K above the asking. And I'm like, okay, well, I'm not going to do that, right? And a lot of people that are patient will get to keep the money because the market mechanism of market auction and overall market is taking the money away from the impatient and providing that money to the patient people. And same thing in this market that you guys are trading. A lot of times, when we buy stocks, at least when I buy stocks, and I give you guys heads up, how many people, let's say, bought Tesla at 300 on Friday? But how many of those same people bought Tesla when they hit, let's say, 212? Probably not as many because those people are fearful. And that's where market will alter your emotions, just like in this case for the house buying, right? They're willing to buy the 600K. They probably could have offered, I would say, 530, 540 and offer some, closing costs. And they would have probably gotten 50K discount. And these guys would probably not have a choice but to sell. Especially, different variables come in if they're upside down the house, if they lost a job. And that's unfortunate because the market is a zero-sum game, right? And you probably experience that in trading, right? You lose, I make. They lose, I make. I lose, they make. And it's a zero-sum game at the end of the day. Is any questions on market auction theory? So just to make sure you guys, when I said it's all about supply and demand, is basically to find the buyers, right? If you're not finding buyers at the high price, then you have to lower the price and go lower, right? If this is our price axis and this is our quantity, if you're going high here, you can figure out where the equilibrium is. Demand and supply curve meet, that's what it is. And if you shift the demand, what happens? If you shift the supply, what happens? Those are the scenarios that happen. And sometimes when we trade, right, when I say we found the axis at the top, right, that means that you found what? What did you find at the top? Like we found something on Friday.
Sellers?
You found sellers. You found somebody that has a lot of supply and they're willing to let it go at that price. And if you didn't have equal or higher demand, that price didn't go through. It didn't pierce those levels. And that's kind of what, we talked about 2024 value area high, 25 developing value area low. And those levels are critical because those are extreme levels on the yearly note. And we'll get to speak to that here shortly. So hopefully out of this call or class, you understand at least the extremes of value. Any questions so far? Okay. So when you, in summary, right, the auction is going to go up until there are no more what? This is my test here.
Buyers.
No buyers.
Yeah. And then it reverses and it moves down until there are no more what?
Sellers.
Good. And we move up to shut off what?
Buying.
The buying.
Okay. And we move down to shut off what?
Selling.
That's good. Does everybody understand that? Sometimes this can be seen as opposite what people, when they get into trading, what they understand. And I know for a lot of people on Discord is straightforward, but this can be seen as opposite for a lot of you. Prices go lower that we can attract the buying and where the sellers stop. And remember, other time frame sellers and buyers, I would say, only meet 0.05% in their lifetime, where you have two hands of other time frame participants meet. Long-term seller and long-term buyers don't meet. They don't exchange hands. It's the long-term sellers that are selling to short-term buyers and they're buying at the wrong location. And us as mainly day traders, right? We have investment portfolio that we're going to go over in a stock scan, but that's different than day trading, right? It's a totally different mindset, totally different approach. I would say totally different read in the game, day to day or week to week, month to month. When you're buying something to hold, like Intel dipping below 20, how many people you think got scared and sold the shares below 20 on Intel? Probably a lot, right? Nike going below a certain level of support at 60, hitting 52, a lot of people freaked out, right? And that's where, knowing what you're buying, if it's at value, if it's not, and then understanding the market theory of, shutting off buying when you're going up, shutting off selling when you're going down is fairly important. And do you guys think search of efficiency, like equilibrium balance or fair value, is static or non-static?
I would say non-static.
Always non-static. The market has so many variables that it changes. I would say probably every minute there's something. Considering we have administration now that tweets quite a bit, there's nothing static about this market, right? It's never static, but when you add more, I would say volatility, it's definitely not static, guys. It's far from it, right? Market's always moving, adjusting, testing the prices, right? And we talked about something, I think somebody had a business, right, with the shoes. We talked about like how does market or how do you maximize profits, right? If you have demand here, and you're happy trading here and you want to increase your profits, what do you have to do?
Raise the prices.
You have to raise the prices. And if demand is met with the supply, you can keep going. You meet here. If the demand is actually not at this level here, at this price, right, and in this quantity, if you're not getting the demand, what happens then? You as a seller have to know what? That you're going to have to lower prices, that price is not being accepted, right, for what you're selling. So then you have to change the mindset, change the approach, and you have to lower the prices and bring it back to an equal price, right? Does that make sense? So we basically just covered this slide. Mm-hmm.
What does static mean?
Statics is something that's not changing.
Okay.
Okay, so here, quick test. What are two kinds of activity?
Responsive and initiative.
Okay. Does everybody know answer to two now?
Yep.
Yes.
Who wants to take a, does anyone not understand number two? It's very important you guys get this. Okay. So we're always shutting off the buying at the top and we are shutting off selling at the bottom. What does market move between what in order to facilitate trade? Number three.
A balancing imbalance.
Okay, and how can we determine if it's long-term trader or short-term trader participating?
Well, 2 times IB is long term, and within IB is short term.
What if we don't have the IB? How do I know?
Buying at the bottom, selling at the top. So responsive activity.
How would you know?
They're at the extremes of the value areas, so in the bell curve.
What do short-term traders look for?
Access.
Value.
Short-term traders look for fair price. So a day trader wants to trade within the fair price because he's considered a day trader. Fair price is desirable for both sellers and buyers on short term, right? Therefore, short-term buyers and sellers trade with each other. When you have a long-term trader, what do they look for?
Advantageous prices.
Advantageous prices.
And if you are a buyer of something, right? Let's say Warren Buffett, especially now that he announced his retirement, a lot of company buyouts happened when the market is really overpriced. In Omaha the other day, He said, there's no deals for me right now. You guys believe that? He said that there's no deals to use $385 billion of cash pile that he has.
Wow.
He said there's not a single deal that he likes. Everything's overpriced. So what is he exercising?
Patience.
Yeah, he's patient, right? There's going to be an opportunity. And if a guy that basically had returns over 20% year over year and is sitting $400 billion cash, I really don't care what Jake from Twitter does then, right? Because if this guy can't find any values on companies, because he usually said, right, I want to buy the companies, that cigarettes, right? We talked about that, the example that he gave, the cigarettes that are almost done, right? He likes to buy those and kind of rebuild the companies and make them a full cigarette, right? That he likes to buy the buds and make sure that he has a vision and opportunity to grow them. So he likes to buy them at discounted prices. So long-term traders like himself, they look really for advantageous price. He bailed out Bank of America way back. He bought the company. He bought a bunch of shares. I think it was almost, if I remember, I don't know if it was $8 billion or 15. But he bought it at $5 a share with preferred dividends, a lot more perks than a normal Joe would get. And he was able to offload that later on when Bank of America hit 35. So when you think about his returns on that from 5 to 35 on, let's say, $5 billion, that's pretty good returns there, right? So long-term traders, they look for advantageous price. They're interested in buying something below the value, and they're looking for selling something that's above the value, right? So that's the idea of short-term trader and on a long-term trader. Let's see. So
And then short-term traders buy and sell within the value because they just want it now.
That's correct. They want it in and out. They're looking for quick points, and they know where expected buyers and sellers are. In a short-term trading, you're mostly when you're trading within the value, there's no other time frame participants, right? Unless you have levels that are crossing. Sometimes when we talk about weekly low or value area low is in the middle of a daily session, that level usually carries a little bit more weight than a developing daily value area low or a prior day value area low. Because if they're able to sustain that, then you might, you dip below it, then you get a rocket up, just like we did off of 2024 value area low, and we're at 2024 value area high now. So what is the market telling you now is that we explored a price of last year. So now if we go like we did above 2024 value area high, and let's say, tomorrow, I haven't looked at the charts yet, Friday's session value area high is below, let's say it's higher than 2024 value area high. How would you trade it? Would you care about the daily profile, or you would wait to see how do we behave about 2024 value area high? Me personally, I note the daily profile, but I care to see what the other time frame participants, do they join on selling or do they join on buying? Does that make sense? I do not want to be buying where probabilities are or in favor of other time frame participants selling. Does everybody understand what I'm talking about?
Yes.
Okay, so let me give you a live example. Let's talk about ES here for a second. And this is, so let me go. If you're new to this, right, I'm just going to pretend I've never had volume profile on my charts. If you go under indicators and you click on technicals, you go to profiles right here. There's different types, right? This is all, you can ignore TPO for now. But bottom, fixed range volume profile, periodic volume profile, that's basically you're selecting the periods. Fixed range means you're selecting point in time from here to here. You want to see the volume profile. Session volume profile is just a daily profile that you see, day to day. That's really what short-term traders do. And then visible range profile is what you guys would see on the right side here. So if I enable this VRVP, that's just going to give me whatever is on the screen from left to right and how did the volume distribution happen at these levels. Remember, volume profile has nothing to do with the bottom volume, right? Volume profile is at this price, how much volume did we have, right? And you're able to figure out, for instance, where's the value, right? So if I look at this right now, I'm able to see that there was a lot of value traded, between here and here. And if I extend that, here, because that's what it's looking at, there was a lot of time and volume exchanged here. Then you can see there's some volume here as well. There's a lot of volume picked up at the top right now where we closed on Friday. Okay, so this is VRVP, but if I enable the PVP, periodic volume profile, then you have these settings here. So the period, you can change it to whatever. If I want to see 1 month worth of volume profile, I can do that. I just changed this to daily time frame candles, and I'm able to see what is it doing month to month, right? So here's my March, right? So if I look at March, you guys should be familiar with this level that we're sitting here. 57.51 is the March VPOC, right? So that's a big level. This is your April, so we are actually outside of value right now. We are part of the imbalance. We're kind of building the value inside of here. If you guys remember some of the watch lists, right, this is the total value right now for March. So if we can build value here, which, you know, they did a pretty good job this week, stay in there, there's very high chance that they can go to 58.34. If you go to 58.34, there's a lot of complications at that area, but we won't go there. So now if I change this, right, I can change it to 12 months, which would be equivalent to a year. The profile is going to take all of these and build me a chart, right? So now I can see that this is basically, let me see, where's that little tool that I use? Okay, so right here. So this is 2024 value right here between these lines. Does anyone not know what value means on volume profile? We haven't talked about it. I just want to see if anyone not know what that is.
Don't be shy to the new guys.
This is your opportunity, guys. This is me teaching you, and if you say you do, then it's great. That means I've done something valuable. But if you're not following, I'm gonna check
Step into options that
YouTube and see if there's people that have questions.
What
Is
was the
anyone?
question?
Do you know what value means on profile, on volume profile?
Where 68% of the volume is traded?
That's 100% correct, right? So why I say that is when you look at this yearly profile, which starts basically from here, this is our 2024 to here, right? From here to the end right here. This is where all the price action happened, right? In this gray box for year 2024. But where majority of the volume happened is here, right? It's within the blue line here. We can change the colors, right? If you go here, typically you want this one to be reddish on the top, and you can put this one as strong green. You can increase the size on these things. You can customize it however you want. What this would tell me right now is that 68% of volume, in my case right here, so if 68% of the volume is traded within this area here, why is that important?
That's where the market is happy trading.
That's where the market's happy trading. So when you think about what we talked about here, right, the balance. So if the market's happy trading here, that's important to know. That's very important to know, because then I know, let's mark this level now here. If this is the value area high, and value area high is nothing else but, if I can spell it, is the high of that 68%, because we know once you went above it, how much volume did we have? It's a trick question for a lot of you if you're not familiar with bell curve. How much volume was here? Was there a lot?
A little bit.
Not a lot, right? Because if you think about the bell curve, right, there's standard deviations you guys should be familiar with. So let me find it here. Let's see. Here's your bell curve. So if you guys look at this, right, if the value area high is here is 68%, 34.1 times 2 is 68.2. The second standard deviation would be, you know, the 13.6 and 13.6. You add those up plus 68, you should get 95.1. So if you go back here now, right, I can change this, right? Nothing tells me that I can't. I can look at this and change it to 95. My computer lets me. And now I would know where the second standard deviation is for this year, right? And look, it's all the way at the top. So the second standard deviation is basically, all of this space here. So they traded basically truly, and the third would be right at the top, right? Because there's not much traded there. So I know, the price and volume was not as strong here, but it's still some, right? They still had some volume, but majority of the volume took back in this zone here. And if that's the case, then I know every time we went above it, we spent some time here that I would say from September till, what is this, March, we spent a lot of time there, and then we liquidated, right? We liquidated all the way to the bottom of where? Where do we go? If this is my value area high, what is the bottom where we bounced?
POC.
No, this would be the value area low. So now take a look. Who stepped in to buy this? So remember, happy traders or short-term traders, you're not a short-term trader on the yearly profile, but in this context right here, right, these are basically, in fair value of 2024. If you go below a yearly value area low, what do you expect to get?
Long-term traders to buy.
That's what happened, right? And that's what we just talked about. We just talked about that anytime you go below value, right, that you're going to get what, Erica?
Responsive buyers.
And they like to buy.
At advantageous prices.
That's right here. So, and not that I predicted, but I said once we lost this level here, we came back, we failed. I said there's an 80% chance that we're going to the value area low and that I would not be as short at the bottom here. Do you guys recall that? I think we are waiting for this for a very long time. And then it executed, and I said, you do not want to be a seller here. And then a lot of people got caught here, probably short, and look where we are right now. So we explored the value down, we found the buyers, and now what is the expected behavior at the top?
Responsive sellers.
Yeah, so responsive selling is to occur at the top, right? Initiative behavior, meaning that somebody's initiating to buy, would be equivalent to my friend offering asking price in a buyer's market for a house that's been sitting 45 days. So if he was to offer, let's say 615, he would be really retarded. He's just a retard now, but he would be super retarded if he was to do 601 would be an idiot move at this market. And it's similar right here. Right now, I'm not expecting initiative buyers to step in here. Is there things that, from structure standpoint that people are seeing, liquidity? Yeah. This is your high, right, before. And if you extend this high, let's say I just extend it here. This is a pretty important level, right? I would say 58.40 from naked price action. This is a fairly important level. Could they go here, then trap, and then, lose this? Certainly. But considering this is developing value area low, we want them below this value, right? Our zone for trading was determined to be here. If you guys remember on your charts, we said we want the price action to be here. We want it below if you're a bear. You want to lose this level of 56.26. And if you lose that, that's great. All the naked price action people are like, oh man, if you can lose this level, that means, we are bearish. Because at that point, you would have higher high, lower high. This is your lower low. Then you're back in the downtrend. Does that make sense? Yeah. So fair value clicks for everyone. Go back to this, kind of go over it. I would say we covered all of this. So I covered this. This is an important concept, especially on your investment. If you're investing long term, this is very important, right? And I can bring up a lot of examples where we went differently, right? If you guys talk about, for instance, AMD, right? So here's your not AM, AMD. So here's our AMD buy zone for us. What we talked about was the green buy zone, and we talked about the 70 something level here for some time. Here's your yearly profiles, and you can see a lot of overlap in this area, right? So you have the POC from 2023 sitting here. Then you have the 2024 value low, and you have some matching here, overlap areas, right? And then you can see this massive POC that was there. It pretty much came for right in the middle of that, right, to kind of trade, and they hit it to a penny and they bounced. I mean, it's a 20-something points bounce. So it worked out pretty well, right? If you're a long-term trader, that was an excellent opportunity to go long, right? Because there's a lot of overlap, a lot of value area highs and lows, and you would expect buyers to step in, other time frame buyers, right? And then if you look at target, we talked about this one as well. And if I just zoom out and go on daily, why is this level important? I mean, mark this one. I think there was a text. I don't know. Let me hide this. Thought I had something here. Oh, right there. That was our buy zone at that point, right? It was somewhere here. Why is that? Now this is your chance to tell me why the volume profile in here would be an important level for buying. It's a little bit lower, something like this.
Prior, it was a bunch of resistance, and then it became support, and also it's the value area low of that one area there and value area high of that one.
That's exactly right. So here, when you guys think about it, right, they were happy trading here for some time on AMD, right? And then you have the news come in. I would say this was basically happy trading, right? This is where they liked value. They built a lot of value in this area here. And if you take a look at it, right, I'm just going to make sure it's not extended for a moment. So now if you take a look at this is the range high, which is about 89.78. You would expect a lot of traders to come in on that level, right? And now if you look at this, I can even extend this a little bit, but I won't. If they're to come back, let's say they dip below this level and they give us this offer at 73, what would this mean for us that are in long-term investors? If they come in here at this level, if you come to this level and you see the buyer step in, what is the market telling you then?
We're rejecting lower prices.
You're rejecting lower prices, and that's how you would find out if the price is being accepted lower or higher. So a simple concept, I'm just going to kind of draw it out manually here, is that you can have a range high. Then inside of that range high, you would have where 68% of the volume is traded. So we can mark that, let's say, with the box here. If this is the volume area of 68%, just want to give you guys a visual on the context on how you know prices are accepted or not. And then you would have, let's say, the range bottom in this case. If this is the range bottom, so this would be our range high, and this is our range bottom. Then this would be here, would be our value area high, correct, of that move. And we can mark this one and copy it. And this would be our value area low. So I'll just give you a scenario now. So let's say we are, this is, let's assume any time frame, day, right? So let's say from Friday, we closed Friday here. Just think logically. What is the market telling you on Friday's close? I have no idea where we closed. I haven't looked at the chart yet. So you start with Friday. What are they telling you about this value based on the close on Friday?
That they're rejecting that value.
That they're rejecting the value, right? They're meaning that they're leaning more neutral bullish in this case, right? They're more bullish than they are bearish, especially if they close above the value. So now when you think about it, if let's say they open Monday, let's say Monday comes, here's a line, Monday comes in and they open above the range. Oops. We open here. What is that telling you? They're clearly rejecting the prior value and they're interested in searching higher prices. Then you know we have setups for that, right? If they do come back for the retest of range high, or in other words, this is what else? You guys, other people might
Previous
know
day
it as
high.
it would be previous day high. If they come in here, right, and let's say they found buyers, right, you can look at footprints, or, you know, if we don't spend a lot of time below this, most likely we're going to continue prices higher. There's elements that matter here, right? And I don't want you to answer the next question, Erica Rockets. What are the three components that you got to look for to measure whether the price is being accepted and how healthy this move is?
I got
The
this one.
value area width,
Wow.
the placement of the value area, and then
Volume.
I want to say the distance between them, but
It's volume, right? Volume is fairly important. And when you look at volume, you want to also pay attention to the bottom volume to know volume is used to make sure that it confirms the auction, right? Volume is used as a confirmation that price is getting higher. So how many offers, for instance, that my friend's buying a house, did they, if the house was not sold for 45 days, how many offers did they have on the house at that price?
Not a lot.
Not a lot, because if they did, what would happen?
you couldn't
Would
shut
have
off the
sold.
line.
Price of the house would have been sold, and my friend wouldn't have the opportunity to bid on the house, right? So value area placement, right? When the value area placement compared to the next day, let's say shifting higher. So let's say the next day we accept it and the value shifts. Let's say it looks like this. There's no overlap between value. That tells you the auction is healthy. They're finding what higher?
Value.
They're finding value higher. It's shifting, right? It's shifting from here to here. So the value area low is here, and then the value area high is shifting higher. That's higher highs and higher lows on value. There's no overlap. That's healthy trend, and we're going higher. Okay, does that make sense? Let me just delete a bunch of stuff here.
Yes.
Sorry, and those were the three components to what? Acceptance of a new
Well,
value?
to measure the move and whether its prices are actually healthy going up or down, right? If you're going higher and your value area placement is overlapping, you should be concerned. If you're going higher and the value area is tighter, you should be concerned because that's not a healthy auction, right? There's not a lot of participation in that. And then if you're going higher and there's no volume, you know, you're now validating the auction, right? Can the market keep going when the price, you know, when there's no volume? Of course. I think we saw it Friday, right? The volume was not that great. I mean, just go here, take a look at SPY. So here's our daily on SPY, and let's just turn on volume. What did we do Friday?
Gapped up.
We gapped up, right? I mean, and we didn't really proceed to go much higher. The volume's actually below the 21-day, I believe, a 30-day average that we're using. You can see the buyers, what happened when we went below the value again? When you went below the value, what happened?
You found like
Bought
other
on
time
buyers.
frame buying essentially.
You found other time frame buyers, and this is pretty crazy. On SPY, actually went to a penny that they bounced from the value. And now you're going higher, and what is volume doing? It's not agreeing right now, right? So value, you know, it's still overlapping lower. If you guys can see this, my value area high, it shifted down basically for SPY, right? If you guys look on ES, for instance, just gotta delete everything. Oh, no, I didn't mean to do that. What is happening that's different between ES and SPY in value? So this is ES, right? What's the difference?
Can you show the SPY again?
Here's SPY.
the
overlapping of the
2025
value.
value area is overlapping higher completely on ES, but on SPY it's like completely almost engulfed in 2024's. So it's almost like an inside value on SPY, but on ES it's not.
That's the case. What is the market telling you here?
That we were trying to reject the 2024 prices, but then we went back inside and we've accepted it, but it looks like we're trying to reject it again.
Yeah, correct, LeBron. So now what would be your key level for puts on SPY? If you lose this level, just add it maybe 6 months out and maybe add some like 511 puts, 500 puts. Like I would target this level right here.
It's probably the 2024 value area high in the POC area.
Okay, so that's correct. So if you look at this zone, this 2024 value area high, and now currently, right, this is considered to be a fair price for 2025 POC. Remember, equilibrium equals POC, where the price is considered to be a fair price. So if this is the fair price now, and last year it was not a fair price, they're still overlapping higher, so you have to be cautious on the shorts because they could explore all the way to 584. Everybody agree? It is developing, but they can explore to see what happens here. And if you guys look at these candles here, you know, this is a massive candle where we actually started to pick up what? This is the, you know, the cluster where volume picked up on selling here, right? And then you see right here, you know, volume flat, and then you have, of course, offloading right here, coming matched with buying higher, but the volume here is lower, right? There's a little bit of concern as we went up, you know, the volume is not really participating in this move. So this would be a key zone, for instance, for SPY analysis on a long-term trader, not necessarily, you know, if you're a day trader, you know, you do not want to be caught shorting 559 here because you're going to expect to see what here?
Some consolidation.
Yeah, you're going to expect to find people that are, you know, I would say reversion to the mean buyers, right? So only when they lose this level, let's say they lose this gap that they have here, very high chance that you can get this pullback, right? Considering that we're fairly volatile, you can expect a 7-8% drawdown from this level. Okay, and this is just the analysis that I'm doing based on a yearly profile. It's important for me to know where other time frame traders are, right? Because if you don't know, what happens? What happens if I short this level right here, like market short at 560?
There may not be other people who see what you're looking at, basically.
Well, you might miss the advantageous people that had a lot of volume, right? So if we peak above here, let's say tomorrow we continue and we hit this level here, we peak, come back, what would you expect to happen here? Consider that this is 2024 value area high, and what happens in the markets, right? What we were talking about earlier. I don't know if I was on AMD or Target now, and I drew all those boxes. Oh, I was here. So what happens in the market when you're doing this, right? If this is my value, when you go above the value, the first stop for buyers is the previous range high. And in this case, let's say whatever, like what's used SPY. If this range high gets cracked, then the last resort for the buyers to defend it and seek prices higher is the value area high of that range, right? And if you defend this, that means prices are being accepted for higher move. So that 2024 failure or defense is going to set up the remainder of this year, guys. So if we defend that 2024 value area high from the top, we're going to put in new all-time highs. Let's say they fail 2024 value area high, most likely they're going to go and explore. If there's levels in between, like we just found on SPY, most likely we're going to explore at least that POC that we circled, I think it was 515 on SPY. Does that make sense? Prices are accepted on top. If they fail, that means you're rejecting and you're going to explore the opposite, which is another way to call 80% rule. Does everybody follow?
Yes.
Okay.
Could you go through it again, Shorty, please?
Yeah, of course. So here's the range, right? So let's say this is our previous day high, and I'll give you a real example here. I'll go to ES, we'll go in 30 minutes, go on SVP, if Shorty can find it. Okay, well, let's go from scratch. Profiles, I'm gonna go with session volume profile here. I'm gonna enable it. And that'll be this guy right here. And there are certain things you have to change. Value area is high there. Let's see, we're gonna put value area high and low. Okay, so now when we look at this price, okay, so here's our daily session volume profile, right? So what are you guys noticing about this? What is the market, for instance, just gonna guide you to what's most likely can happen tomorrow based on daily analysis? So we know, you're in value here, you're overlapping, the auction is really, really struggling here. I would say the top of the auction here is really, I would say, dying. And then you have this, drop all the way to the value area low here to the overlap zone that's similar to what we have between the 2 years. And what did they say about this? They said, no, we want the prices higher. Sure, they proceeded to go higher. So now the 80% rule, and this value area is really, really tight. You have the value area high, right? And that's how you can set up prices of 80% and the rule of 80% to play out. So 57.20 to 56.96, about 24 points on the value, and that's fairly tight. And you know this based on context of, I would say, prior values. If you look to see, for instance, this value here is pretty massive, right? I would say this value is much bigger. It's 3 times the value here, or 4 times almost. So this one is fairly tight. So what is it telling you about participation here?
Low.
Low. When you have low value or narrow value areas, that's not the best auction, meaning it's not facilitated. If you don't have different buyers, it's a lot of short-term traders maybe getting fed by other time frame sellers, considering, the value area 2024 is right here. Okay.
Yeah.
Does that make sense? So now, tomorrow, what can happen is if you take a look at this, right? Let's say we open ideally above this previous day high, right? So that would be our previous day high, and we can mark it, right? We can say this is our previous day high. So let's say we open above it tomorrow, and they quickly lose this right here, and you don't get any bids, right? And that's possible. If they lose this prior day value area high right here, it's setting up for a 80% rule. So let me mark this. So watch now. And then we know there's a little bit of overlap here, which is powerful, right? And this is our previous day value area low. And if people would only wait for this setup every day, you guys would be doing a really good job in patience, and actually your account will grow. So what happens is if you're not able to defend this, right, as they come here, if they're not able to defend to seek higher prices, when the market will 80% of the time, what it's going to do is what we just talked about in market auction theory. If I can't find buyers here to defend this value, what do they have to do when you shut off selling as you shut off buying as you go higher?
Below the price?
They have to go below to search for buyers. So this POC might offer a first target for the short, right? And a lot of people might say, well, that's, Shorty, that's 8 points. Okay, well, sign me up for 8 points every day for the rest of my life. I will do okay. Right. So if first target is if you short here, but how do you know, for instance, this value area is how do you know to get in, to get out? So the professional traders say that if you spend 30 minutes below the PD value area high, tomorrow that you're not accepting the prices higher. So you can use 30 minutes. There's people that use 2 30-minute candles to see if we can't go higher. Then most likely the scenario that's going to play out is the 80% rule. And this should be in your arsenal wherever you are. If you go here, and let's say you spend some time here and you're just dancing, and then you come back any level, there's an 80% chance that you're going to execute this right here. And that means 80% rule in play. Then most likely you're going to go from the value area high to the value area low, and I would definitely treat this zone as, close my shorts type of level right here. because you have the PD value area low, you have other time frame levels like 2024 value area high. You take this short at 20, close it at 98, and that's an excellent trade, right? So I would definitely look for this, and this is called 80%, meaning 80% of the time, if you fail to search and find value higher, you get inside this value, there's an 80% chance that you're going to go to the opposite extreme, basically traverse or explore the whole previous value lower, because this is where it should be met by what? Who should be sitting here?
Buyers.
Passive buyers.
Nice.
Well, you will also have short-term traders, right? Me and you like to buy inside the value. Isn't that what we concluded from the previous charts? Right here, they're trading, they look for fair price within the short term. So a short-term value on a prior day is where? Sitting right here with 2024 value area high. So if you're going to lose any level tomorrow, this is just pretty much analysis for tomorrow. If you're going to lose any level and turn bearish, would be here, right? You want to lose this level and then you're going to continue lower, and most likely you're going to be interested in this level right here, where also happens, a VPOC, right? A daily Virgin POC. Does everybody know what daily or what a Virgin POC is, or doesn't know?
I'm not entirely sure what.
See, that hasn't been retested.
So when you think about it, what is a POC? I think we explained that. Does anyone not know what a POC is?
Point of control. The middle.
So point of control and volume profile is basically the highest level of volume traded at that level, right? So it becomes the high volume node, right? So if you think about volume profile, if I zoom in here, right, and hopefully you guys can see this white on white. I can change this to be black. So in this black zone here, like super black, that's where 68% of the volume happened, right?
Mm-hmm.
Okay. So now, what can you expect to happen here if you're no longer agreeing on that, right? Well, opportunity is that you're going to go search what? Prices where you have found buyers, but POCs where the highest volume traded. And it's important to note, right? Are you trading above it or below it? Because the POC itself is the fairest price for that day. So if the fairest price for that day is here, I'm a little off. Let's say right here is the fairest price for Friday was here, and then we close below it on a P-shaped profile. And let's say if you lose this value, well, there's a high chance you're going to seek to see, what do you do, for instance, at this level, the Thursday high, you crack that, there's a very strong chance you're going to go to 56.36 probably. You're going to have some levels in between, but POC is where a lot of volume happened. And if I was to look at this from a cumulative standpoint, I can do that, right? I can look at this and zoom in only on these profiles right here, right? And now this also, you can enable to see where's the POC for these days. 1, 2, 3, 4, 5, 6, 7, 8. So for 8 days, the fairest price is where? Sitting at 55.48. I can also see for this, 8 days, where's the value area high? It's at 56.36. And the value area low is at 53.84. Another way I can do that is I can grab FVP, which is under indicators. You go to profiles and you click fixed range volume profile. I just have it favored here as if you go under this little guy and click fixed range volume profile, you hit that little star, it's going to come up on this bar, and that's where all my favorite items are. I can also draw an FVP this way, right? And I can look at the price action. What does FVP say for cumulative from this standpoint to this one? Does that make sense? Same
Yes.
concept, right? So now we know that they're building some kind of volume here, and the value area high for these 8 days is sitting right here where we marked it. POC is there, the value area low is here. So let's say tomorrow, we reject this value and reject this POC where we close. Very high chance we can visit this VPOC at 56.59. And VPOC means, it's spelled just as it sounds. I would say this way. And the V stands for virgin or naked. It can be V or N. Some people call it virgin or naked POC. And the reason why it's that is that it hasn't been tested in price action. So if you take a look at this one, has the price ever come back to it to hit this POC? Meaning it went away, but it never really tested that POC. So therefore it's virgin or naked. Then if you go down more, there's another one, right? There's another virgin POC sitting here. If you keep going, like this one was tested, but this one here wasn't tested. There's a lot of them. Then you have another one sitting all the way here, and then I'll zoom out in a second so you guys can see it. And then there's another one. Typically, right, I would say it's not a rule, but typically when you have 5 or 6 VPOCs like this, that's shown at that point when you're building them shows a lot of strength and a lot of eagerness to buy something. But at one point, once you start, let's say you start framing down, it's a new term I'm introducing for newer folks. Let's say this starts framing down. What does that mean? Framing down in this case.
It's getting below yesterday's low, basically.
Yep, that means you're starting to put in new lower lows. So if they lose this level, that would be the daily. And when you're in a trend up, the first step that you want to see is that you want to see the market slow down and flip the framing on a daily, right? So in this case, in order for us to start framing down, it would be 5663.75. And this is similar concept that I just explained using the target drawing that I had. Let me go back. Where is that? Come on. This right here. So if you guys take a look at this, so if we go above it, right, like I said, if you go above it and you come back and you defend this, you're going to put in most likely new higher highs because you're defending the value and you're not interested in trading here. Does that make sense to everyone?
Yes. Yes.
Okay, well, let's take a look at what happened Friday. Now you guys will see it in action. What was Thursday's value here? Is Thursday's value the orange level right here?
Yeah.
Okay. Where did the market dip to and where did it bounce on Friday? Let's take a look.
Pretty much the perfect long for continuation, yeah.
So they came to this value and they said, we're not interested actually in trading here. And look at this. They made higher highs, right? I'm sorry, that was the wrong line. They made higher highs from the previous day high, right? They cleared that. They actually gave you a pretty clean retest there as well, right? They cracked it. They came back very close and then they proceeded to go higher. So this was them telling you, hey, we're accepting the value. The only weakness that they had between 2 days is what? Was this a true gap right here between the 2 days?
I don't think so.
No, they lost PEH, which is usually bearish. But
yeah, I mean, if you think about it, the gap that happened basically happened within the value of the prior day. A true gap would have mean that they went above the previous day high and they opened here. So what they did is basically they traversed, they opened probably higher somewhere around here, and then they came back to PD value area high and they defended it. Same scenario I was telling you now on target, right? Does that make sense? If they were to held the first time on previous day high, that would have been bullish, right? And if you look at it, they actually tried. So pay attention to now what they did here. Look at this, right? They came back right at open. Look at this. You guys see it? They came, they bounced, and then they failed. Now look, the second point that I said, if you fail these previous day highs, their last resort to save themselves is a value area high of prior period, value, weekly, daily, whatever you're trading. And they defended it, right? And then you see them, that open right here, triggered a lot of shit trading, right? The price action here was pretty pathetic. And you see what they did, right? They traded within the value. Look at this. Value area high, value area low, above it, sell, go below it, they buy it, bring it back up, and then eventually, towards the noon, I think there was some news somewhere, right? And the value shifted. So I can take a value from here to here, and I can see what happened, right? From here, the value shifted higher, and then you can see again what happened. They tried to go higher here. They failed. They went to the value area low. They went above. and then they fell, right? And immediately, look what happens, guys. You can look at it like this as well. They lost this, and where did they go? Once they lost the value area high, where did the price go?
To the value area low of that consolidation area.
Then you had buyers step in here, and look what happened. They went where? To the value area high. Then they couldn't. They went below. They basically traded inside here. So there's people buying here, and there's people selling above. Just a simple concept on smaller time frames, right? What we just covered on target. So they shifted the value throughout the day. And you can see that even with naked price, right? You can see the value was built here. They came back and they did not want to trade inside the red box. Does that make sense?
Yes.
Okay.
Yes.
All right, so for the analysis, this is pretty clear right now. So if you guys think about it on day to day, right, I would say there's a lot of poor structure, right? A gap, the way I treat gaps, especially when it's a true gap like this one, if the market auction doesn't come back and fill it immediately, there's a high chance they're just going to continue. Does that make sense? That means that they're willing to go and bid price higher and higher, and that's exactly what's happening here. They had a lot of trouble here at one point, right? They had a B-shaped profile and they caught a lot of late shorts here, and you left a poor low at this point, and then you proceeded to go higher as well. So for tomorrow, I would say, let's say they open above it, there's different scenarios, and then you would most likely explore that 80% rule, and that's what I would pay attention to. The first question you guys should ask yourself when you're trading in, are we opening within value, above value, above range, or below range? Does that sound familiar to anyone?
Yeah, the open
So,
times.
Yes.
so if we talk about that, right, I think we covered all of this. And if you're not following something, you can ask me questions, right? And you guys have this PowerPoint in the Discord. So this is your value that explains it why 68% of the value. A lot of traders in volume profile rely on reversion to the mean, right? Mean being the POC, equilibrium, the fair price. So if you fail, value area high is your target. This one, and then the value area low, which is the opposite side. High volume nodes and volume profile is basically the area of high volume where people were happy trading, and that usually involves a lot of short-term traders trading in the areas, and then dips below or above are probably covered by other time frame participants. And if usually initiative buyers or sellers show up, they tend to go as long as we have about an hour higher above that range, meaning acceptance is happening, right? Volume profile types. Any questions on this? At least in I would say in TradingView, right? I would say TOS, which is my also trading platform. They have some of these tools, but they don't have necessarily as easy as TradingView, right? You will not have a clean visible range. You can have a session volume profile. PVP is fairly difficult to set up in TOS, right? So it's much easier in TradingView than some of the other platforms that I use. Everybody comfortable with these?
Yes.
Okay. This is standard deviations and sigmas. You guys will hear me a lot of times, right? We are in a bracket, and typically I immediately draw first, second standard deviation so that I'm aware, right? This is more about your bell curve, right? What we talked about earlier. First standard deviations, here, 68% of the volume. The second is 95, and the final and third one is the 3 sigma, which is at 99.7. Okay. I use 68, 95, and 99. 99 is not really critical because that's typically close to the high or low of that range that you're targeting. You guys have a video here that you guys can watch, right? And I'll quickly explain how to draw the FVPs and how to go about drawing the ranges. So let's find the stock. I know Citigroup has been in a bracket for I don't know how many years now. So here's a perfect one, right? So if you guys look, I'm just gonna hide some of this stuff. We're gonna hide this. What else do I have open? I have something open. We're gonna hide it here. So now, for instance, right, we know we're in a bracket. Bracket means you're in a range. You're trading, and the range high in this case is sitting somewhere around here, and the range low is sitting here, right? And you can kind of make this smaller. So what I do is, if I'm interested to know how is this being traded based on volume profile, I would say this is, where you start and you draw your volume profile. Then it's going to tell you, right, how's the volume doing inside this range? And we know the value area high here is sitting at 54.50, right? The value area low is sitting, let's say, at 29, right? And then the range high is sitting, that's the top of the box, right, is right here. So this is our range high. We can mark that as range high. And then we can do the same on the bottom. We can call it, in this case, let's say this is our range low. And in order bracket to be formed, what is it that we need? Like how does it look structurally, and what do you need?
3 to 4 touches in the same line.
You want 2 or more, I would say, same levels being touched in order to set up that bracket to be, right? You want the equal highs and 2 equal lows, and in this case you have it, in this case you have it. So it's a pretty good range that City has. And then the value area high is here, and then the POC is kind of right in the middle of that range, sitting at 48.08. So what you could expect to happen, right, is right now they're telling you something, right? They went above the value, they came back and they defended it 2 times. They defended it here, right, and defended it here. But in terms of price acceptance above the whole range, did we get any yet?
No.
Oh yeah.
No, you haven't broken the highs yet, really.
So this is my first Sigma, and I have a pre-template, right? I created it where I can do this real quick. And this is my first sig, and then if I want to draw, let's say, the cumulative POC, I can do that, and I also have that, something like this. So now I have all the levels I need, for instance, for Citigroup, right? I do not trade Citigroup at all. If I was to go, is this an opportunity for me to go long right here?
No.
No.
No, I would not be interested in volume. I wouldn't be interested, because if I'm looking only in this section above this previous one, we tried to go above value area high here for this grouping. We tried to go a couple of times. And what happened every time?
Rejected.
Got rejected.
They got rejected, right? So you have a rejection here, you have a rejection here, and then you have a rejection here. So sometimes you will have something look above and fail, which is where you go above these extreme levels. You look above and you fail, and then you usually target the opposite, which was the 80% rule. So now, as a long-term trader, let's say a shareholder, I wouldn't be interested in, getting any shares at 80s, 83s. That's where they're looking to sell to people, right? I would be interested if they're to offer me somewhere, let's say, if they're to offer me something here, would I be interested in buying there? Yeah, of course. I'll be very interested in there. Is there a better level I could be interested in? I could find that if I go on FRP, right, and if I look at the inputs, you can change this value to be 95%, and that means that I could look for where other time frame participants are coming in. And if you look, there's a little green line here. I'm just going to remove it so you guys can see it. The green line shifted from here to here, which happens to be our what? This would be our second sig, right? So if this is my second sig, I would be interested in buying in this range. I want to buy in this range, especially if I see something like this, and that sets up, a buying opportunity where your reward is something like this, right? So you would go, let's say they give us this long here, you could play this, certainly, right? Okay. Did I click on short, or what in the world? Where did it go? Let's see, what is this? So something like this, right? I could set up where my risk is also whatever that low was, something like this, right? I could trade this, or, patience wise, you could play this. You would just have to increase a little bit of your risk to make sure it's, not 6-1, a little less than that. Then you could play this, right? But SIGs tell you where other time frame participants are most likely going to come, right? So my first SIG is here, second SIG is 5 points below, so I would anticipate the buyers to step in. And of course, they actually already given us a heads up that that's where they're interested. And also, they gave you more clues, if you look to the left, that they were interested in this range before, and that happens to be probably, I would say, if I was to draw an FVP here, that there was some high volume node here that was sitting there, right? And in this case, there was not a lot, but some. There was an LVN here, so nonetheless, they defended it. They didn't like the prices in this green zone, and they're building price higher, right? So, but if they're building price higher, I don't want to be a buyer here. I'll be buyer here, or a seller. In this case, right, I would be a seller somewhere here. So I'll be selling above 73, and that's exactly what they did, and I'll be looking to buy closer to 2025s. Remember, this is a massive, you're talking about from 1987, most of you guys were not alive, to trade here, right? So if they give me this level, this is a good buy, right? I don't like personally buying banks, especially Citi, but just giving you the concept, okay? Does that make sense? The first SIG, second SIG, and how that works? And
Hey,
how
Shorty,
to draw it?
question. If you don't mind.
Mm-hmm. Yeah.
When you took like the hypothetical trade of the loss and reclaim of the 2 SIG and you targeted the POC, your risk being below that low for a 3-to-1 trade makes sense. And if you're targeting the highs, structurally, why would you want to increase the risk from that low to like something a little lower? Because shouldn't that low still hold, like, regardless of what your target is? Or does it have more to do with like the attitude that you're taking towards the trade of, okay, like if I'm targeting something a little bit like longer time frame or something that might take a little while, like I need to make sure that like mentally I know that like I am keeping myself in for like a bigger trade? Like, I don't know if that question.
That's correct. No, so it's a preference of risk and also a preference on. So if you're to go to a brokerage house, let's say you have $10 million, you won the lottery of some kind, and you go in there and you're like, hey, I want to invest money here. You know what's the first thing that they do?
What's that?
Does anyone know?
They ask you how much.
Did they figure out how you got the money?
No, they don't care. As long as their
What's
money.
your risk level?
What's your risk appetite? You will actually do a risk assessment on you. They're gonna give you a quiz where you and, let's say, your wife fill it out, and they figure out what kind of risk appetite you guys have. That's the first thing they do. So if they're like, okay, well, we like to buy this, and we're long-term people, we don't want to trade or look at our account every 2 days, we're this, from 10 years from now, we'd like to have this much. Then they figure it out, and they're like, okay, well, if you're buying Citi at this level, then our stop loss is going to be a little wider, so we can accumulate the gains on the stock. And it's similar to, for instance, let's say, for Pfizer, right? A lot of people are, of course, you're scared on Pfizer right now because, it's giving you a lot of mixed signals, right? But, for me, I kept buying. I was buying. I have so much probably Pfizer that soon I'll be on their board. I kept buying a lot, right? So here's Pfizer, for instance, right? So Pfizer exploded, the story why here, and then Pfizer also exploded here, but then 2020 happens, right? And Pfizer didn't really explode yet. Does anyone think this is an explosion on Pfizer?
No, it's just kind of like a look above and fail, pretty much.
Just to look above, 48 and fail, and you're coming back to the bottom, and you're actually in a really critical zone. So of course I acquired more, but my stop loss is, they really have to collapse Pfizer for me to get out of it, if that makes sense. And why is that? Well, for me, there's a different long-term hold than it is maybe for other people. Also, they have about 7% dividend yield. So I'm collecting dividends at these prices at 7%, and they have a lot of cash, right? So for me, it's a different mindset sometimes than when I trade long-term stocks, right? What if I put my stop loss, let's say somewhere here, right, at 15? Well, how does, when you have another time frame buyer and he wants to buy, let's say, 500 million shares they want to buy here. And, it might sound like, oh, Shorty, they don't buy that much in a day. Well, let me show you something. So let's take a look at this one. Like this here right now is in billions of shares. Like for instance, on this month right here, you're talking about like this green candle. Do you see how many shares were traded for that month, which was June 13 or May, whatever, maybe I'm off. 2.35 billion shares were traded for that month. Not necessarily they're all buys or sells, but take a look at now, right? Let's take a look at most recent month, which would be this one. You're talking about, what is this? We had 1.25 billion traded last month in April. Okay, well, then I zoom in, right? I do the analysis and I'm like, okay, well, you have traded that many shares. We said 1.2 billion, but the formation that you have right now is not necessarily bearish. Did you put in lower lows? But then what happened here, right? So if you think about it, what is it that they did here? Well, for me, this is where advantageous people came in. They started buying this because if you tell a hedge fund, hey, you can buy a company that's making billions of dollars, right? And they also offer a yield of 7%. What do you think they want to do to short-term traders that have a stop loss, let's say, below this major support here? How do they get their shares? How do I get shares? You have these recent lows, and if you want to take a look at this, right? This was your previous low here as well, let's say 19 something. This was the last low before you started the trend up. How do you think they get the shares? If I have to buy 1.2 billion shares, what do I have to do to buy those?
You got to get someone to sell them to.
And what do? If I want to scare you, let's say you have a BMW and I want to scare the shit out of you to sell it to me cheaper, what do I have to do to you? If I had the power to do it.
You got to make it seem worthless, I guess.
Release the news.
I have to tell you that there's not going to be any more parts coming from BMWs to United States. Would that scare you?
Yes.
What would you do if I tell you that? Then you're going to be like, shit, let me get what I
Sell
can.
it.
And what would
Sell
other
it.
people do? They would also look to sell it. So when you have a supply of sellers that's competing to get rid of it, what do you get?
Cheaper price.
You get cheaper price. And there's a buyer that wants to buy. Well, you get the buyer scooping up shares at cheaper prices. And that's typically, let's call it like Citadel and companies that actually see your stop loss orders on the tape. And they're like, okay, well, thank you for the shares. We really, really appreciate it. And that's why sometimes I look at these companies and I'm like, okay, for Pfizer, I don't even have an automated stop loss on. Meaning that they could potentially sell, they could hurt me quite a bit, right? But I'm still going to hold it, right? And then I look at, for instance, here, I just brought it up so you can see it. Is there any problems that you see here? I'm just looking at their revenue, right? I'm also a technical trader, but I do look at, their fundamentals, right? Is there any problems? 41, of course, COVID happened, almost double their revenue, right? But they're back, right? They're growing back. If you exclude 21, 22, 23, 24, from 41 to 63 without COVID, how many of you are getting vaccinated for COVID these days?
Not many.
Probably not many, right? So then you look at it, it's like, oh shit, your sales are growing. You look at the cash flow. Here's your cash flow, right? Operating cash flow is up. I would say investing cash flow here, looks like they're doing a much better job. And then you look at, the free cash flow. What's happening here to free cash flow?
Going up.
Oh, if it's going up, that means that they're, they're doing something right, managing their expenses as well. Does that make sense? And typically, when a company has a pile of cash, I would say, like they have, now let's say another company comes up with a similar drug like Ozempic. How long do you think before Pfizer is like, hey, come on, let's go buy them out?
They actually did yesterday.
The money to do it.
You said what they did?
They just bought a company after their weight loss drug failed.
Okay. You said yesterday they bought him?
I saw it in the Yahoo News yesterday, so it's gotta be recent. It just came out.
Oh, wow. Okay. Well, let's say they buy that company. So what do you think happens to their market share? Like, for instance, Norvodisk, the Ozempic drug that was not, I would say, intended for weight loss. Well, of course, then they want to get your shares, but it's a preference or risk for me as a trader to manage this, right? I can't say that I'm scared of holding this company, even with the news of, RFK and these guys. You're not going to vaccinate this. Guys, the United States is a capitalistic environment, and it's going to be about making money for the companies. Do you really think a lot of companies are like, oh man, let me not put red dye and yellow dye in your food because we're going to hurt the Americans? Well, that was the case. They would never have allowed it to begin with. Right? Can it trigger a change? Of course, you trigger a change, right? Regulation comes in this form. Well, what they're going to do to that regulation, instead of calling it red dye, now it's going to be called natural food coloring. And now they just avoided the regulation. And believe it or not, that happens all the time. Just go check your eggs and how many of them are range-free, organic. I don't even know all the fucking names that they have for eggs now. They're probably all the same shit. But the margin that changes it from range free, instead of having 2 feet of free space, now they have 4 feet of space, and now they're range free. Deep down, you guys know that range free is like, hey man, just go and the chickens just travel wherever the fuck they want to go, and that's range free natural world for those. But they cannot manipulate those regulations, and hence, when I buy long term, I really look at it from different standpoint on, how much risk I can afford if I was to lose quite a bit, but I consider other factors on the risk. Dividends is a big piece for me for long-term holds, so that's why I said that, right? If I'm buying Citi, right, I'm not buying it. I'm just stating if I was to buy it here, I would change my risk appetite, right? I would flip it, right? I would go somewhere. If I'm buying here, I'll grab the wrong one here. If I'm buying it here, I would just put it somewhere below 18, and I would see if I can target the 89s again. But that's just a personal preference.
And you're just allowing for more variables
More
to be
space.
able to come in. Yeah.
That's correct. I'm giving it time to breed. Does that make sense?
Yeah. Thank you.
Mm-hmm. So does the standard deviations make sense to most?
Yep.
There's a video here. It's
Yes.
about 4 minutes. It'll explain everything you guys need to know, and you can watch it. It's embedded in a PowerPoint. And this is the explanation of that, right? And I can go into full mode. This explains your standard deviations, right? You do not want to be a buyer between second and third, right? Or above the first on the top, and the same is on the bottom. You do not want to be a seller between these SIGs, right? We shut off, you go down to shut off the selling. So once the selling, for instance, shuts off, you can expect buyers to step in and drive the price higher. Okay. Value area tips and tricks. I mentioned this last time, and I can go to each bullet by bullet here, which I will. Do you guys understand that this is your, I would say, this is your morning routine? You go, wake up, brush your teeth, shower, and review this slide. Does everybody understand why, if you just read any of the bullets? Because this is going to erase your bias that you're coming in overnight. When you wake up, let's say you have another job that you're working and there's a lot of shit, your mind's not clear. This slide alone will set you back to looking at it more from systematic standpoint and understanding, is it bullish or bearish? A lot of people, when they trade, they create a bearish bias based on the position that they're in. Let's say you swung some SPY puts, Monday comes in and you're like, man, we're short. This looks bad. And then you try convincing yourself, and then you start looking at the extremes of Twitter and what other people are posting and blah, blah, blah. And then you realize the market never gave you any indication that something's short yet, right? Like Friday, I was waiting to see what do we do. If we close below the value or if we crack below it, I would have added some SPY puts. That would have mean that we closed below 2024 value area high, and I would have been happy with that. Did I add? Not yet. So that's understanding the market behavior to be, hey, is the market giving me any clues? And what is it telling me currently? You want to be present. You don't want to look at, unless you're using RSI, MACDs, and all that. Those would be the lagging indicators of the stock market.
Shorty, according to that slide, you had told us once before, and I'm looking for my note and I can't find it. But there were like 3 questions we were supposed to ask ourselves when we look in the morning, like where we're opening. And could you repeat those for me? I can't find my note. I'm sorry.
Yeah, we'll get to it. I think you're talking about where's market trying to go, right? And is it doing a good job getting there?
Oh, okay.
Yep. So if the stock price opens above the value, and this is always previous day, previous week, month, and then it falls back inside the value, this is a very strong bearish signal. Can everybody visualize this first bullet? And if you can't, I don't mind drawing it. I just want to make sure you guys can actually visualize this. First point. Is there anyone that can't? And I'm totally okay if you say can't. Don't be shy. Like I really don't mind repeating myself. Everybody understand it?
I kind of do.
Okay. So what it says.
I missed the question.
So if everybody understands and you can visualize the first point here. If the stock price opens above the value area and then it falls back inside the value area, this is a strong bear signal. Can you visualize this? Can you see it reflected on a chart?
Yes.
Okay. So for people that can't, I'm just going to kind of go into it a little bit. Let's see. Make this a little bit bigger. Okay. So what this means, above the value, so let's say tomorrow, this is our prior day value, right? This is our prior day value high, value area below. You can call it value area high. So let's say we open here. This is our open now on Monday. Monday open is here. So that means at this point that you're opening above prior day high, right? That means just the range high or that session high. Okay. And now let's say you lose that level, but more importantly, you lose the value area high. That means what?
Bearish.
80% chance hitting the value low.
That means the price above this area right here is actually not seen as accepted, that they're failing to find new blood and new buyers. If you can't find new buyers and you lose this level, we talked about it previously, that there's an 80% chance that you're going to go back to the value area high, which would be, I think we said, when ES was 20 something points, here it happens to be like $3, right? So not a lot on, I know it's still a lot, but not something we're used to lately. I think we've been spoiled with, I would say, quite a bit of movement. So if you lose this, that's extremely important that it turns bearish here. And that's what the first point means, okay? Does it make sense now? You open here and then you fail to hold previous day value. Most likely you're going opposite value. You're going to traverse and find, see if there's buyers here. Then the question is, well, we didn't find buyers here, right? Then they go below and they give you this. There's a most likely an attempt that you're going to seek for rejection, and you would target to find buyers somewhere around here. The notion that, they could definitely show up somewhere in this level. So how you could play it is you take a short here, stop loss maybe above this one, target here, and you close it and you're done for the day. Okay. So now back, if the stock opens below the value area and then it rallies back inside the value, this one should be now clear. Does everybody now see this one?
Yes.
So now this one is just the opposite, right? So you open here, right? You're opening below. You open below the value and then you regain the value area low, which means that you're rejecting the prices lower. The same thing happens, it happened here, right? So if you guys look at it on this day right here, I'm just looking at ATH profile. You can definitely go on RTH on regular, and I'll give you a similar scenario. So now, we open above the value here, above the range. You came back, you actually tapped the value area high to a point, and then you proceeded to build value higher. There are scenarios where, let's say this one here, you opened below the value, then you tried to get inside the value and they rejected it, and then eventually you got in and look what happened. What did they do? If this was the value of prior day between these 2 days, what did they execute? They got inside once, they rejected it, they held, basically they stayed with the vicinity of the POC, and look what they executed. They executed the 80% rule between here and here fairly quickly. You're talking about 4 points. Make sense? You can do analysis between these 2 days. So we opened somewhere around here, and you went inside the value, you executed the 80% rule for that day, and that was nice, right? And then they dipped below, they came back to the fair price of that day prior, and look, they bounced nicely here. Do you have to go long here necessarily on this level? No, you could be patient, right? And let them reclaim this zone right here. Once they reclaimed their zone, they gave you a nice setup here, and look, you could have targeted developing value POC right here, and they tapped it to a penny, and then ultimately the next day they came very close to the value area high here, right? But they gave you the 80% of the prior day, which was basically from this low to here would be 80%. They got in and they gave you that. They gave you the move from 546 to 550 on SPY. Does that make sense to all?
Yes.
Yeah.
Okay. So now we go back. If the stock price opens above below the value area and continues to stay above below, this is the acceptance of the value, right? You should expect the price to follow through. So in this case, right? So let's say tomorrow, let's say we open above that value, here, and let's say this is the zone that we want, right? Which should be value area high, maybe even this, just because it's very tight. Usually when I have tight value area high and a POC like this, I usually wait a little bit for POC to crack. Well, let's say tomorrow they open in this area, right? So they're opening above the range, above the value. That's very bullish. The rule is that you're watching to see first what they do, what, where.
At the range high or PDH.
Yeah, so the first is, what do you do at this level right here, which is our prior day high? Where is it? Come on, they're not seeing this. So this is our prior day high. Then we would look for buyers to fail, right? Could they dip inside here and trap some people that play the open high close, right? Certainly. If they were to fail this level of 567, definitely take a 0 DT short to 565 and close it there, and you're done for the day. That would be good. If they come back here and they defend it, they're rejecting this value, guys. That means they don't want to go back inside. They believe the value is higher. So that would be a good long, and you're looking for higher prices. If you don't have any context on the left to find levels, you could simply use, let's say this was imaginary chart. You could use some fibs, grab the highs and lows for that day, and you could target the 1618, 127 as your first targets in that case. Okay. I'm just saying if you don't have it, but you do have a lot of context here to the left. I'm just giving you clues. Okay, then the fourth bullet, the good indication of trend lies in observing value area placement. Does that sound familiar?
Yes.
Okay, so if the value areas are, clearly making higher highs and higher lows and no overlap, then that's, I would say, a pretty strong acceptance and the trend is healthy. If value areas begin to overlap or move in the opposite direction of the trend, the chances are good the trend is slowing or beginning to balance. So you can do that on daily profiles. You can certainly do it on higher time frames. And you can look at this, right? Let's look at it from whatever this gives us. So at the all-time highs, I believe this is right here. Yep, I think more in February. Yep. So let's focus somehow on this range for a moment, like right here. So obviously we're balancing, right? We're in a bracket there, and then you can take a look here, right? And what's happening. So here you have a short cover rally, liquidation happened on this profile. The next day they gapped up, blah, blah, blah. 2-day balance, they sent it lower, broke the PDL, but still closed higher. Then you see a massive short covering rally. Something happened here and then they proceeded. But look at the next profiles here. Value area super tight, value area overlapping higher, right? And then they trapped everyone here on the long side. I mean, there were so many probably people trapped here that it was a no-brainer, right? So they overlapped here, they dipped below, they trapped the shorts here, then they proceeded higher, right? You have a triple distribution profile higher, which is telling you we accumulated here, we accumulated here, accumulated higher, and then they failed at the top. And then look what happens. The following day, they gapped down, right? They got back inside the 2-day value here. And ultimately, they went and explored. They actually went to that value that caused that imbalance right here. They tried to hold it. And then look, simple balance to imbalance. We just talked about it. If you're not able to trade there, they're going to come back. No value acceptance, came back all the way down to this value. They dipped below it. They got rejected. Tried again. They got rejected, rejected. And then you pay attention to volume and the value shift. Shifted value higher. Immediately the next day, the value shifted from those 2 days lower, lower. Small overlap, but really no progress. This is no progress on buyers right here. POC didn't go far. They didn't even clear the previous node. They proceeded to crack this value area low and that day POC, and look what happens the next day. They shifted lower. They came back and are like, hey, can we get inside this value, please? We want to trade basically here. They want to trade inside here. They said, nope. Then you have an outside day. Usually when you have an outside day like this in terms of value, proceed with the breakout, right? And then you see, they proceeded with the breakout. They came back. And again, they're not able to crack a really, really critical zone here where you have a bunch of value area highs stacked. So the market's telling you, hey, we're not really interested right now for higher prices. We want the lower prices. And here's this. Then they came back, they shifted it lower, and everything is shifting lower. Here it's higher, right? And they closed at the highs, but they failed to take out the previous day high. Once they lost this level here, this was your go-ahead. Yeah, we're going lower. This is a value area high. They failed there. They got rejected on the top side of that value. They proceeded. Shift lower. Outside value again. Gap down. And look at what's happening now here. In terms of context here, look at this. Value, but the auction is slowing down for lower. This is where a lot of people got probably trapped somewhere around this area right here, and then they proceeded lower, and then they trapped them, and they really delivered the pain. And then you're watching to see, where are you going? Are you going inside these values, or where are you headed? And you're able to see that they really never cracked any of the major levels. If this was our low at this, they came back and they bounced, but they're not able to get in, I would say, here. So now where SPY is sitting right now, is SPY coming up to a key level?
Oh, yeah.
Oh, it's coming up to a very, very key level, guys. I would expect that there's some puts being bought here very soon. And I will also look to see if I could get some as well. So now if you take a look, we went higher, and then here's pretty clear. On these 2 days, this was a really nice liquidation profile, right? They rejected it here. They tried to get back in. And for me, you guys know this really well. When you have these overlapping value area lows, this is my go-to, right? You have stacking value area lows. They tried to get in, they got rejected, and then you guys know what happened from there. This was massive, like a lot of gaps, a lot of selling, and then here you have a really weird profile, right? You have other time frame buyers coming in, some sellers, and they're pushing price, and this is just a short cover rally, instigated by late shorts here, and then they started buying, and you've been on a basically a rampage here, higher ever since, higher. Overlap, gap, higher, and now I still have printing at higher, but when you have a compressed P-shaped profile like this, what should you be aware of when you have compressed P's?
That maybe things are slowing down.
That maybe there are some trapped buyers there as well. Because think about what it means to have a P-shaped profile. So if you think about this, if it's P-shaped, what does it tell you about price acceptance in this area?
They didn't stay there long.
They didn't like the price here. They like it at higher prices. And usually P-shapes indicate that there's a short cover rally. But this short cover rally, I mean, does it look like it was a clean short cover rally to you guys?
No.
No.
So you went from balance below the value, they didn't like it. The next day open higher, retested. So they rejected it nicely, but did they achieve a lot, right? So in terms of fibs, you really didn't need a whole lot to figure out where they're, I would say, headed. They came back to 1618, they struggled to find any value between the 2 days, and now they're stuck there. They closed below the POC as well. This is a compressed P to what we've actually seen lately in the market, right? And it's relative to the current behavior of the market. I'm trying to find some P shapes that were pretty extended. But this one is fairly tight, I would say. Another note and trick to pay attention to is where's the value area in terms of high of the day? If the value area high of the day is at the top, let's say it's right here, what does that tell you about the buyers?
They look exhausted.
Well, be careful. If the value area high is all the way at the top, that's telling you that they're willing to trade at the high prices. If the value is shifting, let's say from the value area high and it's somewhere in the middle, that means they didn't have a lot of buyers there and the value was not accepted at the higher prices. They shifted the value high. Does that make sense? That means that we had somebody step in and they push the price down, and typically above value, who comes? Is it short term or other time frame people?
Other time frame.
Yeah, usually it's other time frame people that step in. So, right, if you look at in terms of TPO here, there it's about to come up. I know it's not the class of TPO. We'll do that next week or a week after, as long as it loads. I don't know why it takes forever nowadays. Is it just me or is it everybody's profile is just...
It's been laggy lately, like the past 3 days. For me, anyway.
Yes, real quick and see what it does. There it goes. Thought I was on the yes the whole time. All right, well, here's yes. So I can see, is there any access being built on? And access would mean in this case, right, it's easier to spot it on market profile than it is on volume profile, but I'm able to see if there's other time frame participants coming in yet, right? And when you zoom in a little bit, yeah, there's a little bit, right? You have about 3-4 TPOs high here. So there is some other time frame participants coming in. Is it massive yet? No, right? And when you think about it in terms of open and close, they open here, they closed at the highs, at the top quadrant of the highs. So that's remain bullish right below the POC. Right, so tomorrow, let's say they open below the POC, you can expect a quick dump to 56.93 immediately, where we would look for some buying activity to happen as well from short-term traders. So you want to look for access, when it's coming to these critical levels. If we don't see the access, I mean, other time frame participants are not stepping in. And when you look at this, right, on time spent, right, this is just time spent, not volume spent. You can enable both of them, right, and you can put them side to side. You can change this one to be right aligned, and now you're able to see, POC on time and volume matches. We spent a lot of time and volume at this level. We went above. We found some selling access here, right? So they're present. There's still some other time frame participants that stepped in. Once the price reached almost, inside the value area high here, they stepped in right off of it, rejecting the prices lower. So constructively, they still remain in control on the bull side, right? They're in control. Tomorrow, we could definitely find some stuff, right, on the short term, right? You lose 57.12, you could target about maybe 15 points lower, and you would expect buyers to show up there, lose that 56.71. So the value area, the last two bullets right here, the shifting of the value is very, very important because that tells you if the trend is healthy or not. Is it aging or is it new? We were able to use this multiple times, if you guys remember, previously, right, where we used it as to figure out how is it doing on the weekly. And here's the weekly profile coming up here in a second. So what is happening on the weekly trend here? How are we doing?
Trending up.
Notice the trend difference between, let's say, here, 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 here. Then you went up for the 3 weeks, right? Call it the bear flag from Twitter. And then you have a value shift lower, and how are we going up higher on value? Are we stacking them?
Yes.
Overlapping.
Oh, it's overlapping. The value areas are clearly overlapping here, guys. Like if this is my value, the next value here is overlapping with this value. The next one is an outside value, and then this one is probably the healthiest one with the level being 55.40 on a weekly. That's probably going to be our key level for, which is a pretty important level. If you guys remember, 55, 56. If they can crack this, maybe a little bit lower, somewhere around here. They lose that, that means that this value here then is no longer being accepted, right? So if they lose that, then they could go here. But the odds are now, right? So let's say if they clean up this level here tomorrow, you don't want to short until we come to this level right here, 58.36. Once you come here, would I get some puts here? Yes. I would load up on some SPY puts at this level, and I would say there's a high chance they would do that. Because this would be our penthouse trading, if you guys remember. This is our top floor of the building. Then you have a lot of value being built in this level here, right, and sub levels. So they come here, they can maybe knock on this right here and get rejected, and then, wouldn't be shocked if something like that plays out. But right now, they're probably targeting this area here, because if you look at these 2 weeks or 3 weeks, when we had this initial sell-off here, right, this was a pretty aggressive in terms of the sloping line, right? This is pretty aggressive. You're selling straight down, right? And this is a lot of aggression here on selling, and then you have some buyers step in. Is there a difference between these 3 weeks and what we are seeing here? Which one was held here? Give me the analysis.
No overlapping on the first one, and the trading was like short term, I guess, because they're all in the value. And the other one, the value areas are much wider, so there are other time frame participants, and I think that's healthier. Am I right or wrong?
You're right. And what else can you know?
Oh, sure. Somebody else, please. I don't know what else, Shorty.
Anyone else?
Would it be that with the overlapping value, you build a stronger structure?
You're building stronger structure. You're building stronger structure as well, right? And then you have to pay attention on, for instance, this last week value. The price, the value didn't catch up to the price yet. Is that correct? Because the value here for this stayed right here while the price went higher, right? So let's say, this week coming up, let's say on the weekly, they lose this level right here. There's a level here that you could target immediately, which should be a 55.33, about 100 points in between. Most likely this will play out. Does that make sense?
No, can you explain a little more?
Yeah. So if this is my value area high, this is my prior week value area high, right? Same concept that we talked about just now, first bullet. If the stock price opens above the value area and then it fills back inside the value area, this is a strong bear signal. So if you open above, which there's a very high chance we're going to open above 56.43 unless we have somebody tweeting tonight. Let's say they open above this and then they lose this level. Well, the POC would be the first level of that prior week plus the week's prior value area high. And if you remember, this is a crucial level for them to regain because that enabled them to go higher because this was the prior week value area low or the 3 weeks low. Sorry, not prior week. So if I was to grab this and you just look at this, for instance, right here, and you change it to 68 and don't extend it. That happens to that 4 week value area low. So now they're telling me that they're willing to accept that price, and I'll pay attention to this. Here, I'll make it easier for you guys. I'll enable it here so you guys can see it. Let's see here. So now that's my area here. Now pay attention to what you're seeing here. This was the POC. This is the value area high. And then this is where we had the liquidation happen, where they really, really rejected the value from here. That means that we went lower. And remember when we did this analysis, when we talked about that, this was not really bullish bounce. And I explained in chat, I give you guys pictures, is because we spent too much time below it. When something is advantageous, let's say iPhones go on sale, iPhone 16 tomorrow for $150. You think that inventory is going to be depleted fairly quickly?
Instantly.
Instantly. But why did you spend 2 weeks below the price and then you basically went to the value area high perfectly here at 58.36? You rejected it, right? So that means you rejected this value, but did you find instant other time frame buyers in this 3 weeks? No, you didn't, right? Maybe you found it here because you found it and you quickly went to the opposite side. So this one is different than this one quite a bit. Here we didn't have buyers. Here you did because it also happened to be 2024 value area low, like I think it was like somewhere around here, somewhere like right here. So the difference is that if you're trying to get inside this value, and this was the POC on the weekly that initiated the selling, and this is the value, and you can't get in it right now, which is the bottom of this, right, where we rejected. If you can't get inside here, most likely you're going to go back to the value area high to see if you have what? You really have buyers here or not? If you have buyers, then higher chance you can go and target this level. If this happens, this is your target, like right here. If you fail here, your target is the first target is POC. If you fail here, right, your odds turn from 80% to almost certain, right, that there's 99.9 chance that you're going to go to this zone, which will be prior week value area low, because that'll be 80% on the weekly. Does that make sense?
Yeah.
Yes.
Okay.
Yes.
And also, there was a lot more volatility between these two periods, right? Or 3 weeks. A lot of narrow value areas indicate that there's not a lot of volatility. When you add, for instance, in this case here, let's see, when you do this right here and you see a lot of value areas wide, that means there's a lot of participation, right? Different players are stepping in. And you can see that, right? So this at one point was our crucial zone. If you guys remember on the weekly when we talked about that, we really want to hold above this level to be long. And look, they offered that perfect bounce here. On Wednesday, they came back, defended it. And now, think about where they're headed, right? Look at the stack where they're dealing with. You have value area from here, value area high, and then high and low. And you just kind of draw this right here and look where we are. This is not a spot for you to be long. Where it would be is if they can go above this level, let's say tomorrow, they clear this POC, then I would target something like this. You can go above this, and then let's say you hold this area, then you can target this, what is that, 60, 70 points. And I'll be very cautious at this level. This is a major level, 58.35. I would not mess around with any longs. You do not want to do the price discovery here, with your or my small accounts compared to the other players that are coming in. This would be massive level because they would try to find acceptance inside here. So if you go here, they would want to trade inside here, and you do not want to be the one bringing the price here. Your market buys will get squished here. Does everybody follow? So there's different levels to it, right? Different perspective, different time frame participants. But this is 100% not a level where you want to be adding right now. Is there a chance they rip another 70 points? Yes, certainly. But I would say just be careful, because when I look at these 3 weeks and all the selling, even though the volume here was quick and they bought it up, you're still trading basically within this value. And this is the 1, 4, I guess let me go back here. Since March 3rd to 3 months, your first SIG is sitting here, and I would not be a buyer here. No way in hell would I ever buy anything here. Does that make sense?
Yep.
Okay. Let's see. So does everybody understand the trend, the movements, the stacking? That's what this explains it, right? The price can either be accepted or rejected. That's what you guys should know, and that's what we're about to find out. When the price goes to the opposite extreme and they try to get in the top right here, if they get inside, they close. In this case, I would want to see at least 2 days close inside of this. That means that they're accepting value, they're not. If they get inside here, let's say tomorrow or this week, they get inside and it's a quick, and we get some single prints here on TPOs, this is a perfect spot for me to start adding some SPY puts, right, for longer, and I could target whatever that level is on SPY. We can find that somehow here. So that would be, you're targeting SPY. Let's see, what is this? You'll be, come on. 540s on SPY, right? So that would be a pretty good move. 580 to 540, you will have 40 points target there. And this is just translating ES levels to SPY levels. So you guys can trade both at the same time. Okay, let me go back. Now we get into the fun stuff. And I covered this all live so far, but there's a structure to it. You guys have it. This needs to be your, basically, I would call it the Bible for opening types, right? So the value areas you guys should have picked up right now that, it's 68% of the volumes. If the values are stacking, going higher, that's bullish. The price and value are catching up. They're shifting. They keep buying higher, and they're not disagreeing. There's the 4, I would say, that you guys have to pay attention to, right? And then here I'm gonna give you all the scenarios. Opening outside of PD value area, but but inside the range. Opening outside PD value area, but outside the range. Opening within. Acceptance, rejections, right? And then the question is, do you want the price to chase value or value to chase price? Let's say you're going higher. Do you want value to chase price or price to chase value?
Value to chase price.
Yeah, you want the value to chase price. You know why? Does everybody know why?
No.
Just think. Just go back to your chart and just logically put that what you're saying and it works, right? If the price is going higher, that means price is exploring. It's shifting higher. If the value, so let's say here, you're going higher like this, right? And at one point the value was here, and the next value is shifting higher. Isn't that the case that we want? We want the value to start shifting higher with the price as it's exploring. If the value is staying lower for multiple weeks, let's say you look at these 2 weeks for now, just for here, right? And that was the value for 2 weeks. Agree? So now when I look at 4 weeks here, the value shifted, right? The value shifted higher here at this point. But I can also look at these 2 weeks from here and see where's the value. Is it overlapping where it's no, I'm sorry, is it shifting without overlap or with overlap? So the first one is here, the green zone. The second is happening right here. So how's the trend?
Overlap.
So for 2 weeks, there's a little bit of overlap in value. They dipped inside this value. They did find some buyers, then they rejected it here, right? They really want higher 2 times right here. So it'd be this level and this level, right? So the value is shifting higher, right? It's shifting, but it's overlapping. And then you can also, monitor this from this standpoint. So let's say we lose this, I'm looking at analysis now. If you lose this area right here, which happens to be that critical level that we had, well, the odds are really nice that you're going to mainly probably sell off and, you lose this area. You can target what? What would you target? First, you would see there's buyers that show up here. And then the second is what?
See?
Yeah, POC. And if I extend this guy, let's just extend it. Shits and giggles to the right. Where's the POC now? See if you guys can actually see it. So when I extend it all the way, okay, so if this is my 4 week, right, and they're trying to build value higher, but they fail at this value area high, what do you target next? 5293. You want to go somewhere around here. Your first target sitting at that cumulative POC, which should be here. That would be the case of 5,300, and then you're looking to see eventually do they come to this 4 week SIG 1, which should be here. And that would be the case, right? That you're kind of trying to play out. Right now, it's shifting higher, but it's overlapping, and the auction's slowing down a bit here. Okay. So now you get into each scenario, right? So I would kind of maximize this. Opening within value and you're accepting it, right? If the market opens within value and within 1 hour balance, we don't exploit outside of the value area. Opening within high chance that will lead for a typical range day. Risk and reward are both reduced. When you have a range day, your risk and reward are reduced, and usually that means short term is in control. Buy bottom, sell tops, that's how you play it, and you're trying to see what type of day you're going to generate most likely, and typically leads to I will call it just a typical wide day, and we'll talk about the days here shortly. Generally, the developing range will rarely exceed the length of the previous day's range, meaning whatever you had, high to low, is probably going to stay within that area. It's not going to go higher. I added here the risk to reward and what you have to kind of correlate to number 3, right? If your risk to reward ratio trades you take is 1-to-1, in order to be successful, you got to win 51% of the trades. Risk to reward at 2-to-1, you have to win about 34% of your trades, right? So if you're winning, let's say 50% of your trades and you're 3-to-1, that's actually pretty excellent, right? If you look at this, if you're 3-to-1 ratio, you just have to win you have to win 26% of your trades to be profitable. And that's where your probabilities are in your favor, right? And that's why I tell a lot of people when we do one-on-ones, the first thing that I tell you and I ask you is to look at the size that you play with. Because a lot of times when you're playing with much larger size, you don't let the trades play out. And shortly after, you realize, oh crap, only if I would have let it, breathe a little bit more, it would have given me 3-to-1. A lot of you guys forget about this on the right side. And I just given somebody a feedback to reduce their size, even though their profit factor is almost 3-1, and their win rate is 49%. I asked them to reduce the size. What could that lead to? If their win rate's 49% and their win ratio is 3-1, what could they fix with that if they reduce the size?
Bigger profit.
Bigger win rate percentage.
Yeah, your winning percentage is going to increase, right? So you would, instead of 49, now you would have 3-1 with, like, let's say 55%. That's excellent. Not a lot of traders can get to that level. Okay. Here's your opening within PD value, right? So if you were to think about this and visualize it, right, I would just say, if this is our profile here on the left, and it looks like this would be your value area high, this would be your value area low, and this is range high, range low. Let's say the next day, let's say Monday comes in, and this is our Monday, and you're opening somewhere inside of this value, and IB set, and you're closing, you're not breaking the IB, and it's within the value, very high odds that you're going to have a typical day here, and most likely you're going to trade here. So if you dip below here, reclaim, this is your long, and you're driving it to this area here, and you're closing your longs, you're looking for a flip and short. You're careful around close of the day, especially if you're, flirting with the highs and lows of the current day, because typically they can do a spike in the M period, and most of you guys are aware of that. That would be the case of acceptance when you open within previous day value. Here's an example, same thing. Here's your rejection, right? If you open within the previous day value and within the first hours we explore outside of the area, market's not liking the built value in this price range, most likely they're going to reject, right? And that's what that rejection means. They don't like the value, right? Risk to reward is actually increasing when you have this case because there's a potential for imbalance. Somebody's disagreeing on the price. Okay, so take a look at this example, right? So in this case here, you opened within the value of the prior day, right? Here, you open here, right? And you see them. They went to the value area low here. They found some buyers, and then ultimately, what did they do? They disagreed. They broke the previous day high. They rejected the price to the higher levels. I believe this was back in the day, February of some year. Does that make sense?
Yes.
Yep.
Okay. So this is your rejection, right? Just a scenario where you reject, you open within. This would be the bear scenario where you proceed higher. You don't agree on the price being built here and you auction lower. This would be the bullish scenario of open within. You go here, and what you want to look for in these scenarios, both of these, let's say we go, you open below and you quickly bring up the price here above the PD value area low. You want to go along here. You want to go along here, and you want to target the highs, and you can put your lows somewhere below the recent lows created, and this becomes a really, really good trade, guys. It becomes a really high probability trade for yourself. That means they rejected the prices lower, they reclaimed value, and you just want to ride this. You want to go long, forget about it, step away, put your limit sell here, and go away. Let the market do, because if you stare at it, a lot of you guys are itching, I'm going to take profits on any pullbacks, blah, blah, blah. Sometimes you just have to let them play out. Does that make sense? And the same would be here, right? So let's say that, they go above here, they open and they go and they sell off, they bring it back. Well, you go short here and you can target this one right here, right? And if they crack that, sure, maybe you can keep some runners, but it's not a level where you want to add to your short. At the lows of the prior day value, that's not where you should be adding shorts. Look above and fails here would be ideal. Make sense? All right, well, this one is also balanced, right? You're in balance because you're opening outside the value area, but within the range, meaning previous day high or previous day low. Will most likely lead to a range of the same of previous days. Since you measure from the extreme same range as previous day, this is not a rule that you go to your friends, but like, oh man, this works 99% of the time. It's just a hint that there's a high chance that you're most likely going to trade the same range as prior day. This one can be a very difficult type of day to trade because they have a lot of options, right? And a lot of people struggle to change bias intraday. So this one becomes a little tricky, and it's not the most confident open you could have if you're on a bullish or bearish side. Notice the current AVA has been shifted above and has overlap on upper side. If you're bullish, do we break the range of previous day low or high? And I'll explain that here shortly. So if you look at the two models of opening outside but within the range, if this is our previous day high, and let's say it's similar to what we could potentially do tomorrow, but highly likely that we're going to do this tomorrow. If you open somewhere between PD value area high and previous day high, that's this range, and then let's say you crack the previous day value area high, what's in play here?
%80%.
Yeah, this would be your 80% rule that you are basically, you didn't explore this area that day, you open above it and then you lose it. You're targeting previous day value and potentially even the PDL right here, right? If you open above, like let's say here, let me 1 second. If you open above, your first instinct is that they're going to hold, that they're rejecting this value for higher and that they want to target, right? If they go to PDH and crack it, they're most likely going to proceed. So that's on a bullish scenario. You would turn bearish here if you can't hold above this PD value area high. That becomes a bearish setup within this bullish opening. If you open outside of area but within rejection, right? So if you think about this on a bearish sentiment, right? You're opening below the previous day value area low. That means you're rejecting these prices but to lower. But let's say you open here and then you reclaim this. That would be the 0.2 on that chart that I shared that you guys should print out. That means you open below PD value area low, but you regain it, and now you're here. Then it sets up to a reverse, and this will be your target. But if you open here and you crack the PDL quickly, right? The auction shows confidence. Let's say you open here, you come to PD value area low, open test drive, you come here, you reject, and then you put in your lower lows, higher odds that you're going to continue here in terms of rejection. So this is opening outside, but within a range. That's not the most confident open. If they open outside here, that's a little bit more confident on bullish and more confident on bearish. Does everybody follow?
I'm trying.
So same concept, you know, take a look at it here. So what is this day here? What did we have on this day here on Friday?
A P shape?
Oh, no, like in terms of open, right? So this was your prior day from Thursday. Where did you open?
Above.
You open above the range, so let's take that. So Thursday to Friday. One, you opened above. Okay. So you open above. I'm just gonna put it out to you guys. And VA. So that means which scenario would that be? That would be this one. Open outside of range, correct? You're opening outside of range. Bullish is that you hold a PDH. Bearish could turn if you lose the previous day and you would target a PD value area high. So now if you think about it, what they did, this was our previous day value area high. And that's the last resort before you turn bearish on the day. If this is my previous day value area high, they should not lose in a real confident auction. They should not lose this. Bulls should not lose this.
So was that them just trapping bears?
This could be a very good trap on the bears, correct? But also now with this shape here, they could be trapping bulls as well because it's a compressed P shape. So tomorrow, let's say they lose this level, you know, tomorrow, what would you expect? I would certainly expect that they give us this. I would expect this scenario. You lose this tomorrow, this is a very high chance that you're going to drop 50 points. Okay, but the continuation between the 2 days only. You opened above PDH, you lost PDH, and bounced perfectly from PD value area high. Still accepting prices higher, but not the most confident option at this point. Because if it was really, really eager, what should they have done on Friday?
Bounced off PDH.
Done that, right? But they did not, so they failed. So tomorrow, if they're not able to quickly crack, if bulls want to continue, of course, if they can't disagree on this price, on this value, if they don't crack this tomorrow, does that make sense? So just take a look at it now and see. And this is our, we will call this previous day high now.
Shorty, I had a question. I guess this is where one of my struggles are, because we were even right before open, I had shorted 56.98 where the 2024 value area high was or is, and I guess I was thinking maybe write it down farther, especially once we broke PDH. Do you look at more long term since 2024? Or do you still look at the current or the previous day too more?
Sorry, I was not 100% following the question. I apologize.
I'm sorry. So I think you haven't even mentioned that we shorted. I had originally shorted 56.98 on Friday right before open.
Yep, I did too. Yeah.
Yeah, and so I guess I was thinking of going lower, especially since we did break previous day high at open. But like you said, we did bounce off of previous day value area high. I was thinking maybe even looking to get an 80% since 2024 is a big level.
That's correct.
Do you?
Yeah, but if I want to lure in more buyers, what should I do tomorrow?
I guess test that level again for them to
Sure.
go in.
So now tomorrow with the compressed profile that we have, perfect spot is that you go above, you find the access, you get a B profile with a bunch of access, and then you sell it. I don't think they found a lot of buyers to push in to trap them yet. I think tomorrow could be a really nice day for that.
Okay.
So they visited, they found some access, but not a lot. And what that does, especially if they crack this PDH tomorrow, it gets a lot of people thinking all-time highs, right? Like we said, you know, the 58.36, the bottom of that penthouse is going to be pretty much do or die, right? So they still have room to trap, I would say, a lot of late buyers. Right now, the buyers are, you know, like, oh my God, I missed this low, right? That everybody's calling permanent low, whatever that was. It was lower than that, 5,800, 4,800 or whatever that was. This was 2024 value area low. We're at 2025 value area high. This is not an area where you're looking to buy. Certainly not a buy for me. So it doesn't happen immediately on a day, but we haven't found massive access yet. We found some, like we've shown, like 4 TPOs. But now, you know, if they're able to, let's say, lose some of these levels, open below them, lose it, and let's say we find the access here, that would be a clear indication that other time frame people stepped in, right? And they're, you know, maybe they're not seeing as much buying and demand, so they're like, okay, crap, no more buyers here. Let's sell quickly and then look for, you know, find a buyer. So I mean, I think that short worked out for you if we took this at, I don't know when you took it, the 98.25. I think it was
Yeah,
before
I took it
market.
up there. I guess that's one of my things is knowing when to take profits, or like how you said, letting them ride out longer, or even
Yeah,
being able to switch from short to long or vice versa.
So I think the key was on Friday is when they came to this level, right? PD value area high. It was crucial for them. It was make or break, right? And I would say that was I think we actually targeted somewhere around that area to close it, right? We did not want to be long at that point. Just like we were targeting, I think at one point overnight, I forgot where it was. I think it was this 55 here. That was after our watch list. We were long here, right? We took a long here and we targeted, I don't know what it was. I think we said it was 5,700 was the target for the long. So if you took that, that was great, right? You could have taken that. And then you had a lot of, I would say, reasons for a stop loss, right? So if you think about this, this was the prior day value and we took this long. They went all the way to the value here. This was also a great long. You peaked below this value, you came in, and then of course you targeted 5,700, which was a 2024 value area high. So I would reference levels as a day trader in between the days, right? The previous day high, the low, the value areas become your levels that tell you the story. You lose this, then a short-term auction is, changing. You know about the long term because the levels are there for a year. But your short-term auction tells you if something changed in a sentiment day to day. And I would reference the previous day high, the value, and the value area low to tell you the intermediate targets. If you're taking a short at 98.25, you know it's a big level, right? You could have, targeted the previous day high, right? And then ultimately below that, just like we've shown on the target chart. If you go here, where was that? Simply here, these are the levels you're playing. You lose this, target the value area high. This becomes a crucial point because if you can't find buyers, then you're looking for the POC and then the value area low to play out the 80% rule, right? So use the levels from the date prior to help you with the targets as well. Unless you're swinging something, right? If you bought puts, let's say for October at 2024 value area high, you've got to give it space. You can't target $2 stop loss because you're playing a pretty big, I would say, value, right? You're talking about value of, I don't know, a couple of 100 points on ES. So hopefully that makes sense and I give you an answer, but you cannot rely, as a day trader, you're getting in on the short because you're expecting other time frame participants. You cannot expect it to be not abused in a short period, right? On a longer period, it will most likely work out, if that makes sense. Like if I buy puts tomorrow, I see them failing, like at this level, right? So let's say they can't hold this level right here tomorrow, and they dip below it. Well, they already explored this whole value here, so now they're interested to see can they get it up in this penthouse trading here. If they're able to go inside, then they can grind this. They can definitely grind this higher and push the price all the way to the top and potentially all-time highs. But let's say they peak above and they fail here tomorrow, I will load up on puts. And I can't let the day-to-day be my stop loss. It would be more something like this on a position, right? So if I take this, I'll probably play like this, and you could target maybe somewhere like this. It's almost 3-1, which would be that POC of 24. And then let's say the rest, you buy 10 contracts of something, you could target this with SPY being, let's see, the SPY would be, in this case, would be a lot lower. Let's see. I'm trying to set these levels up to find it. So you're talking about SPY being there. I can't find this damn chart. Oh, you get the point. Whatever that SPY point level is here, I would target it somewhere around 465. So if I'm shorting, let's say from, what is this now? SPY from 540s to 460s, that's 80 points. I can't give it 5 point stop loss in SPY because that's not probable. Statistically speaking, it's not a trade that's going to work out. So if I'm trading, intraday off a 2024 value area high, I have to use previous day high, low, or weekly high, low value, some reference point that's recent to take my profits. Unless you're willing to swing some futures over the weekend, right? Then it's a different story, but I would not recommend that.
Thanks.
Okay. So opening outside of range, I'm sorry, opening outside but within the range, right? Outside of the value, but within a range. That's it's a tricky day because you have to be ready to shift your bias a lot in this one. When you open outside of range, let's say like we did, day prior, you opened higher here and then you came back and tested it, right? You're watching to see, do they get new buyers and is it an extension? Like it's a pretty big P elongated. In this case, it's not. So you're watching to see the behavior of the market. Does something shift here? They defended it super nicely. Tomorrow, let's say they lose this 56.95, 96. That means they're rejecting this value. Most likely they're going to go back to that Friday low here. It's about 30 points that you will have some opportunities to trade, right? When you open above, outside of the range, it's all about the previous day high and low, and you want to pay attention to how do they behave. Here, if you necessarily shorted this right here, it would have worked for a bit, but you had to be ready, to take short from 83 all the way to value area high, which is what I'm telling you that next level is. If you're shorting this, then you're closing it at the value area high because that's where you would expect buyers to show up to defend it. In this case, they did. If they would have lost this level, then you have a little bit more fall. You have 56.37 coming in. Does that make sense? And I think that would help you, Erica, to answer that question.
Yeah. Yep. Make perfect sense.
Okay, so we covered this slide now, and we covered majority actually prior here. Does everybody understand this? You should be able to visualize this, and you should be able to reference and find them on your chart.
Yep.
Okay. So from the day types, like I said, this should be something that you guys have printed out, right? Normal days, normal variation, normal trend day, double distro trend day, and neutral days. This will eventually become something, that's ingrained in your head and you're able to see it quickly, especially when the days are forming compared to the other. Sometimes you can, it's not necessarily prediction, but you can see what potential day you could have, right? Is it forming a double distribution day so far? Or is it, is it framing up on every period, every 30 minutes, higher highs? Most likely we can have a trend day or a P shape if it's up, or BK's lower down. I would say that this is very, very important for you guys to understand. I can teach you this, but until you sit down and find normal days and touch these points one by one, I would just be reading off the slide for you guys. Like if you look at a normal day, right, and then you look up some of these points and see, you will see how well this usually reflects what you're kind of learning. And who's in control is very important, right? In normal days, I would say short term is in control, balanced markets, short-term traders win. Normal variation, right? So let's say you have an IB extension to one side, but you stay below the IB within IB2. That's not necessarily a trend day. It's just that you're leaning more, let's say, bullish if up IB8 is broken or IBL is broken to the downside. Then it's giving you a little bit more bearishness in that range, especially if you close within IBL and IB2X. That's a little bit more bearish, right? And I would say the control is divided there. Once you crack the IB2X, it usually leads to normal trend day, right? So if you're not able to crack that, you can expect bounces from 2X all the way to IBH, and I guarantee you can find a lot of days where this happens. If you guys look at the TPO, I'm just going to hide volume profile. You guys can, open up the initial balance, and you also have it here. And you can see here, for instance, this was IBH here, and take a look, for instance, what's happening here. So IB2X is right here. You're actually closing this dotted line is IB 1.5. So they broke above the IB, but how confident were they on price action higher? I would say not very confident, right? They stayed very close to the initial balance. So let's say tomorrow, if you want to trade more aggressively, they lose 57.03. That means this value here was rejected. And I would say there's very high odds, at least, that you're going to go, probably somewhere around here, go here, and then ultimately you can find this IBL retest of this area to be there present. So the initial balance, a lot of clues, right? And one of them is, are you trading within the IB 2x? Are you going above it, going 3x? Above here, you're making a trend day. Here is just a neutral, I would say, extended typical day, right? Or normal variation day. Extended typical is also what this means. Does that make sense? Normal trend day is usually you're framing up on every period. You're not really looking to make lower lows, lower highs, and you can find those. Usually you want to find some kind of P-shaped profiles, and they just keep proceeding, right? So if you take a look at, let me see, on Friday, what happened, if you hide the candles, and I like to use market profile for this. You can see right here, right? So they stalled a little bit between C, D, and E, right? So A had access, B put in a higher high, C put equal high. So you have a poor high intraday. They cleaned it up a little bit. They eventually shifted the value and they held it above, right? And they closed somewhere around here, 57.11. So a failure to close, to hold above this value, it's telling you they're going to shift, and most likely you're getting here to 56.80s. Which will be a pretty crucial level for them, which is also Thursday's high. Does that make sense?
Yeah, so that'd be a good long, right? 56.80.
That would be a pretty decent long, correct? Yeah, you would watch to see how do they behave. If they lose that level, then there's potentially for a quick flush all the way to about, I would say, 56.35, 37. Most likely they can crack really, really quickly here from here to here. Double distro days, this is, when you think about double distribution days, you can probably find quite a bit as well. At one point, they agree on price. Let's say this day here is actually clear as day, right? So you have a nice set of single prints here, and you can also check volume profile for the same, right? So if you go here and don't extend it, it clicks. Why is it doing this? Let's just do SVP. So if you take a look at this day right here and the volume profile, right, it's pretty clear as day, right? They built value here, then some emotional changes came in and buyers in the I period, and they proceeded to build value higher. They left a poor high here, of course, cleaned up, and they closed above it. But you see, at one point the value was agreed upon here. Then after the emotional buyers stepped in, right, they shifted the value and they closed here. So for instance, the 80 level that we just talked about, right, 56.80s is pretty crucial. Because if you're not able to build value, let's say here, eventually at 55.80, if you come back here, right, this is a pretty big zone for them. If they can't hold this, then you're looking, most likely that you're going to be looking at this right here. You could potentially go all the way to 53.72 just on 8-day analysis, right? So that's your double distribution day, right? So you agreed on value similar to trend day, which could be a trend day, but you need to be reassured a little bit. The confidence is second highest in terms of confidence, right? We find the balance and perceive the balance to be either unfair high or unfair low in auction in opposite direction. This resembles the B-shaped profile, uppercase, very small initial balance, right? And that's how you can recognize it typically. Long-term typically control the day with minimal two-side activity in the HVNs. And then you go back, that's pretty much what happened in that day right here. Right, so they two HVNs, one top, one bottom here, and elongated on the bottom, right? More participants here than here. And then neutral days, these are tough days, right? A lot of people tend to lose money here because they're expecting market to move. They increase size and then they basically chop sideways. And typically this means like a really, really tight Here, yeah, we haven't had a lot of those lately. I would say this one is probably the smallest we've had on Friday. If you think about the ranges, right, for the day, you're talking about, we're used to like 200 points nowadays. Let me just show you here. So this one is 81. So this one is tighter, and then you can see, from here. So we're, the volatility is coming down, and you can see that, right? 161 points, and this one's also more than 80. It looks like it actually. 70, and then you see contraction, expansion. This is pretty wide balance range as well. We're used to 100 plus lately, right? And that's when volatility is pretty high. So here's 115. So right now, this is the tightest range we've had, and it's a P-shaped profile. Usually tends to lead to a little bit of a trapped buyer here, right? So tomorrow will be a pretty good day to see if we get the access in the MB period and see if we get a sell-off. So far, so good.
Yeah.
Yes.
I would say please know these days and start recognizing them, and you can see what you could build from these days to understand what could actually come. Into trading of the each day types, I would say it's probably a little bit higher level for some of you guys, but it's really what we've talked about the whole time. You have a D-shaped profile. Who's in control? Short-term traders, and short-term traders are in control. That means they like to trade within the value. So that means you buy the bottom of the value, you're selling the tops, right? Once you know the volume profiles, I have a typical day, responsive buyer sells be present on the high and low of the day. That's what that means. You want to buy, at the bottom, target the POCs. It should be 50% typically. And then you have the P shapes. This is usually cause of short cover rally. If you have a P shape at the bottom of a trend, that's typically what that means. You had a short cover rally, and for instance, tomorrow, you want to see how do we behave in this value. If we reject it, you want to pay attention to the next closest HVN, see if they find buyers, because that's the buyers that brought the value higher. If they fail here, that's a disaster. Most likely low of the day will be tested because there's not a lot of support here. There's not a lot of volume, more time being spent. So that becomes a really nice liquidation sometimes. But typically they will give you a clue with the axis on the top. If you get a B shape above it, that's usually leading to the low of the day test. Lowercase b, right, just the opposite of p, right? So this means there's a long liquidation, right? Somebody's, they got trapped on the long side and they liquidated them quickly, shifted the low value lower, nothing found here. If the price closes above 50% here, this is pretty important for the day that's invalidated, and most likely they can test high of the day. So I would suggest you guys read through these rules on the day types. Let me see what else is fairly important. This goes into market profile. We talked about this, the date types that goes with the slide where you have the days and which one has the highest confidence, neutral, normal variation, double, and trend. It's good for you guys to know that, so that way you're not, let's say, when it's a normal variation, that you're not jumping in the longs, especially if you're staying below the IB2, that you're not really exercising and discovering that yourself. So I would say that's fairly important for you guys to validate. So in terms of bigger picture, like, oh, Shorty, like, this is great info. How the hell do you use it all? Well, you have to start your analysis, I would say, on a higher time frame, right? So typically I start, I would say, in this case, I know where my, I would say, 12 months levels are, and we can kind of look at it here, which is what I was just talking about, right? If my 2024 value area high is sitting, what is this, 5701-ish? I thought it was a little higher, somewhere around here. Prints. So let's say this is my 2024. I wish they would just add labels to it, but that's okay. So let's say this is my 2024 value area. Then I pay attention. See, are we within value or not of 2024? Well, we're testing the opposite extreme of where we actually bounced to a penny, right? So if we bounced off of these levels, that means the other participants believe the value is higher. Now they're at the extreme of the opposite side, right? This is where I don't necessarily go for longs, but I look for shorts. This was our previous all-time high, right? I would call this path, previous all-time high. And this is an important level, right? So when you think about auction, at one point we believed that we can find prices higher, and we went above it, we retested it, and that's where this penthouse level was found, right? So they defended it. Now, if we can't get inside of this, market's really telling you something, right? If they peak above tomorrow and they fail and they lose this value area high on other time frame levels, especially if we have access on the top, then I know they're rejecting trading above this value, and there's potentially going to be some, bullish people that are trapped. And then let's say they lose this value right here of developing, right? That's important to know just from higher time frames, right? Even though it's developing value, but you could definitely change this then. If you're a really high, long period trader, you could change this 3 months. Since we just finished a quarter, you'd be able to see where's the quarterly value, right? So your first quarter Q1 value is overlapping the Q4 nicely here off of 2024. Q4 and Q1 is sitting right here. Remember, I said 836 will be crucial. So if they can, knock here, this will be also a very good spot for some shorts. If they peak here and then lose this, man, it's setting up for a pretty disaster, right? And quarterly level, you guys see the value is still shifting higher, and now we are above it. This is not a spot to buy. Like, this is not a spot for me to look for longs right now. Hopefully that makes sense. So we are out of balance on quarterlies, right? And then I would go down to monthlies, and I do mark the levels, right? So I would mark this on 1 month. Then I would look what's happening month to month, right? So if we go here, it's going to kind of change the behavior. So here's the March. And March did not have necessarily the widest value. So you could certainly put this as our March value low. And if you can remember these levels, you don't necessarily have to, or if you have multiple monitors, you don't have to chart every single one of these. And this is our March value area high. And now I'm able to get some, crucial levels that I can expect buyers and sellers to go up. And this is my March POC, 57.54. So now I'm able to kind of, there's a congestion of stuff happening here. So I would not be necessarily exercising a lot of size in this area, but rather, trade a little bit conservatively here, because there's a lot of traders that could be here. We're inside March balance. You have to mark, I would say this level here. And I want to ask, why is this level important? Because this is our prior month, April. So if this is my April value area high and March value is slightly above it, let's say we are not able to hold this zone month to month time frame. What does this tell you? This zone here, if you're not able to hold this. So you lose this level right here. What is this?
We weren't
Peak above and
accepting.
fail.
Yeah, it'll be a nice peak above fail, and that's setting up, right? So the question you have is the value shifting down, value placement down, volume on buying here as you're going up is what?
Anomaly.
Decreasing.
It's decreasing as you're going to higher prices, right? So I would say that there's a higher chance that, this is just a nice bounce off of these, 24 value area low, but exercise caution here. That's what the market is at least speaking right now. So I would mark this, and of course you see that April POC was an excellent bounce here recently. This would be actually a virgin POC for the month. And then you have value area low. And why is it that I mark these levels? Well, it might look like, on a daily, it's congested. Once you're trading, intraday trading, guys, these levels, they're not that congested. You're talking about some major levels in between, right? Even here, while it looks, it's about, 30 points in between. If you're able to crack this previous all-time high here and the massive zone that we just talked about, if you guys remember, that's pretty bullish, right? And then if you look at this, this is just the April month here. we don't have much of May, which we don't care about. It's important to note that, right? I would say it's important to note it for multiple reasons, right? Because right now we are outside the balance, and that means that we are most likely continuing higher in search of sellers. So now we're trying to see, hey, is there any sellers that come in and stop this auction and show us the path down? And first thing is look at the dailies, right, for framing down. Next, I go on the weeklies and I look at the behavior. How is that market? I look at that on 65 minutes on ETH on a volume profile. So now I'm able to see, okay, well, the value didn't really shift. There was a lot of time spent here and a lot of volume because there's a high volume node. If you zoom in here, it's a pretty nice volume node that being, and they went higher, they got stopped at a pretty critical level, right? So let's say they lose this prior week value area high this week. What could you make out of this? Even though March value area low is here, right? I wouldn't expect it to carry a whole lot of weight, right? First of all, March was pretty tight. I would expect them to ultimately go, to the April value area high all the way down, right? This could be a potential bounce, could lead all the way to prior week value area high, but ultimately this would be my target. And then you have a weekly VPOC. So I would mark this as prior week VPOC, and in my head, I'm creating scenarios of what actually could play out, right? And then you see that there's a little zone here between April value area high and prior week POC, and the other week value area high sitting here. So this is a pretty congested area potentially for a bounce. You lose this, I guarantee you that this comes in super fast here. And that would be a prior week value area low plus the POC from the prior week here. Because the stacking was nice. There's POC stacking higher. That means there's going to be a lot of buyers in this area, and that's what they pretty much did, right? They're in a full control as it stands right now. And I'm actually going to keep this chart because it's going to be my go-to chart for tomorrow. So now I know we're above the balance or imbalance on the weekly, right? On the monthlies, we're also outside of the April value area high. So we're just developing starting May. For me to turn, really bearish, I would say on the month, right, would be that we lose this area here. You lose this probably 50, 51. There's a high chance you visit 54.92. Once you lose this April, I'm targeting what on higher picture is, hey, if you can't defend this level, then most likely you're headed here, and I'm keeping that in the back of my head, right, while I'm trading what's happening. Make sense? And then finally, I shift this. You can close PVP by use SVP for the dailies. You shift it 30 minutes, and you enable it. And if you're dyslexic like myself, you would shift this to the left side. And now you have, an idea, right? So you have a P shape, value shifted higher. So tomorrow we find out if there's only profit takers or if you actually trap some longs tomorrow with this, congested highs, crowded highs at the top. If they fail to quickly go above, or if they go above and fail, I'm going short because this happens to be a previous all-time high. There was a lot of weight. It's the balance, massive, penthouse balance that's coming. If they're able to crack this, right, most likely they go to March POC, and then this area here is going to be massive. Super, super, super important what they do here. Otherwise, you crack this, your odds for all-time high are very, very high. So just keep that in mind. Okay, so we are in balance on daily. I would say, we are out of balance from day prior. You closed in balance here. So tomorrow it's going to be a pretty important day, and I think we have FOMC on Wednesday, so there's a lot of binary events coming in and some big earnings. So a lot of volatility to come in, right? So from the daily perspective, we're framing up. We had I would say, outside day here on a daily, right, on ETH. And if you look at RTH here, it's just basically a day up, right, with the lowercase p. Like I said, it's very compressed. You have to be a little bit careful tomorrow. And then what I do, and this is not the class for it, I do look at TPOs to see if the market's giving me any clues, and I'll show you what I mean by that. And I typically don't care for candles too much. come up, and then I'll look at the structure, right? I'm seeing that there's a lot of value built here in the upper. There was some access here, and this is all daily, right? I'm looking to see if there's any anomalies I should be aware of, right? So I would mark this one as my kind of unfair high from Friday, right? And you can add whatever you like, right? This is Friday unfair high. So I want to see how do we behave tomorrow here, especially if you lose this level here. It might be interesting for a short, right? Nothing much on the daily. They're just telling you so far, bulls are in control. They're rejecting all the prices lower, and they're gapping without gap fills. So on a daily, not much to give you here. Sometimes what you pay attention for here, and some of you guys might understand this, some not, but we can do a class on this if you don't, is we're paying attention to see if there's any spikes, right, that happen, and that would be the M period here. We did not. We had K period access, right? So right now, there's, the IBH was sitting at 57.03 here, which they said, hey, let's close above it. So far, they did at 57.11. So if you want to turn somewhat more bearish, they lose the 703, you have 10 points, maybe to value area high of 2024. But ultimately, I would think that 82 would be your target for a short target from here, 18.03, and then I would say somewhere around 83 would be on the short-term levels. So not much info on this one. It's just basically screaming they're buying it and they believe price is higher. Then I also check TPOs on the weekly just to see if there's any access or any single prints that are dividing that value. And this is my weekly right now, and you guys will see what this means. So this one is actually pretty clear as day. Anyone see? Let me just hide the drawings here. So this is our weekly right now. Is there anything that you would pay attention to here from higher time frame on weeklies?
There's a skinny belly, I think.
Yeah, so she is referring to the 650, 627 all the way here to almost the halfback, the midpoint, basically separating the value. And I like playing these setups, as you guys know. So, first retest here for the longs, there's going to be somewhere around this 56.25. See if they can hold it. If they fail to hold this level, guys, there's a high chance, you potentially go all the way here to the 5,500, which was a big POC for us. You failed that, then ultimately you're going here, and then pay attention to the bottom here, right? Anything interesting here?
Or low on the weekly.
We have a poor low on the weekly, which tells us what?
Auction wasn't complete.
Yeah, so if you look at the candles, right, you open, you close, you open here on the left side, you close this, so there's some unfinished business on the weekly, right? So if we do crack this level, let's say the halfback period, let's say you crack above 5998, for some reason, I recall 9.8 being my, no, I'm sorry, I'm mixing the numbers. No, oh, this one. I recall this level being 98.25. I'm actually going to go back to it because that was the level I've known for some time. I don't know what you guys have, but this is the level I was going off of for 2024 value. So if they're not able to hold this, let's say this level at 59.96, there's very high odds that we're going to go to the previous week value in April POC, which would be a nice zone to close your shorts and see what happens as an intraday trader. Does that make sense? Right, so that there's a high potential. You lose this in between, you're opening up to the bottom distribution of that weekly chart. So that's what that's giving me, along with the poor low. I would mark that as a weekly poor low. That would be potentially the target if you lose this level right here. Let's call it 55.97 all the way down. That makes sense to everyone?
Yes, Shorty.
I'll also look at this on the monthly level, just see kind of what's happening, right? So if this is our month of May, then I see the value here, of course, on the TPOs. Nothing really extraordinary here. You just have a massive access low from April, right? So I would say this is my April access low, and you want to carry that forward a little bit. It's going to be important. And right now they're trying to build value above April as we know it, right? April value area high on volume profile and TPO is very close, kind of like right in this range. So if they lose this, then we know, you have the April POC is kind of sitting like right here in this range. So April.
Shorty, I'm struggling with your 2024 levels. Like I have different ones. What's the difference?
How would I know what's the difference if I don't know what you did?
I don't know. I went to ES and I just want to know, how do you do them? Do you do just like FRVP or what do you do?
I do PVP, so that's what I was explaining a little bit earlier. So if you go here, type in 12, change it to monthly, and you can take a look at this. So here's your 2024 value area sitting right here where I marked it. So I had it changed just moments ago to that level that was somewhere like around here.
Okay.
Well, on a higher time frame, if you're within 5-10 points, I wouldn't really sweat it. You could even draw a little zone around it, like to protect yourself.
Thank you.
Any questions? So I gave you, volume profile, how you look at it, what it means, analysis, the openings, right? Acceptance, the price is always either accepted or rejected, and that's where you want to pay attention for, right? Some people go even further, right? If you look at, on higher time frames, if you go here and let's say, see, that's the level I had. I don't know where 98.5. So if you go here, right, some people, you can go on much higher time frames and look at this kind of to give you the picture, and you could zoom out more and create different FVPs if you care. So let's see, you go on a weekly time frame here and you can take a look, right? I mean, if this is, potential value that we had where we bounced, right? This was one. Then you can say that, well, this is the top value and I'm interested to see how do we distribute volume from here to here. You could definitely do that, right? You go here and, it's a lot screaming now that, hey, there's a high chance you can go here higher. And that's at that 51 level. So if they don't lose that soon, they could definitely send this much higher to all-time highs, right? So I wouldn't be screaming much till we actually lose, 2024 value area high is going to be super important. That's all I'm going to tell you. Either we accept above it or we don't. And as of right now, we're right at it. So you don't have a lot of confidence right now either way. You need the price to tell you which way we're going. And as of right now, so if you look at this, what we just talked about, let's see. So here's your 2024 value right here, sitting somewhere around here, and then you have the 24. So you have to crack back inside this value area high, and then a big fight starts. So it should be somewhere around here, the level that we just had. There it goes, 90s, whatever, 8-ish. So you can zoom out, and they're defending this area for right now, right? They're defending this prior all-time high. There was another prior all-time high here, pretty good distinction. And then you have another one that we're kind of approaching right now. So you're looking at these higher highs and higher lows and where we rejected, right? So as of right now, bears are running in control, but they can really fail here quickly with no notice. All right. Well, if you guys don't have any questions, I would conclude it here just because I'm actually tired of talking since 11:30. We can do probably a market update, but I think we've covered it, guys, pretty well in terms of prices and levels and what we need to do. So I will probably trade live tomorrow with you guys tomorrow. The PowerPoint's actually posted in the Discord. I can tag it for you guys on the volume profile. I do suggest you at least print the 2 slides that we talked about and understand the opening of the prior day value, weekly, monthly, are you in balance, out of balance, and then be aware where other time frame participants are coming in, just kind of like where we are right now. You would expect other time frame buyers to step in just like they did here. it should be stepping in here because that's the expected behavior, right? When you're above value. Right.
Shorty, could you show me? I forgot which anchored VWAP do you use? I tried to find it, but I didn't save it.
Let's see. So this is the one right here, anchored volume profile. No, I'm sorry, anchored VWAP. This one right here.
Okay. Do we know who makes it
Oh,
in
that's
the
just
indicators? I can't.
no,
Oh,
it's
it's
not
just
an
a
it's
tool.
standard. It's trading view, right? So if you go there and you can click all-time high, right? So if you click here, we're above that one here. And then you can definitely look, 2024. There was basically a pinch here. Now we're watching to see what happens out of this pinch.
Wow. Thank you.
Yep. All right, guys. We'll relink the PowerPoint, and for many people, if you're interested in learning, you're welcome to join. We usually have a limited number of spots that we keep in a Discord, and I would say I'm not here to have thousands of members. I couldn't handle you all. But for people that are serious in learning, I think we provide pretty good support all around, and I think people are actually nice and they consider other people friends and made friends. So if you're interested, you can join. If it's not something for you, you can definitely walk out. But we do try to bring people up and try to teach them how to trade, and I would say it's a fairly supportive group.
I agree.
All right, guys. Have a good day, and talk to you tomorrow.
Thank you, Shorty.
Thank you.
Thanks,
Bye.
Shorty.
Thanks, Shorty.
Thank you, Shorty.
Thank
Bye,
you.
everybody.
Bye.
Bye.